Okay, let's get everyone in. Good morning, good morning, good morning. Okay, if you guys can hear me, can you all please help me type VXX or whatever you all can see on the ticker symbol? Can you guys hear me and can see the screen? All right, great. Thanks, Bob. All right, rock and roll. Hang on. Okay, so glad to have you guys this morning. I'll go straight into it. Some of you quite seasoned one. How many of you guys from my SIC club one? If you're from my Super Investor Club, can you all type SIC? Then this one should be quite easy peasy for you. Okay, by the way, because I didn't want to waste everybody's time, so I just show the guys a timetable, so that you all know when to come in, and also when to just go and take a walk. For those who already understand options very well, you're going to do push up first. Okay, go and work out for 1 hour, then come back in. Okay, so okay, this is the timetable for today, and as mentioned, at 9 a.m. I'll be going through options 101 because I realized quite a number of you are new. Any of you all are new to these options? Relatively new, maybe half a year, still not very sure about options. You can type me so that I know that you are new. Then I can go through more in depth. Oh, quite a number of new. Wow, serious or not? Let me see. I check your name. You don't think I don't know you all? Okay, quite a number of new names to me. Devon, you're not new lah, right? Hey, Terry, you're okay. I guess you guys are just either super humble or you are blatantly lying. Okay, doesn't matter. Let me just make sure all of you are coming first. Okay, anyway, so from 9 a.m. to 10 a.m., I'll be going through options 101. If I end earlier, I'll let the Telegram know also because I told them 10 a.m., right? I try to end by before 12 today. Okay, then after that, I want to share with you guys right about the inverted yield curve. This is quite important because as an investor, we also want to make sure that our downside is protected. So right now, quite a lot of us, we are making quite good money. It's just that if the market really turns around, right, we need to take care of ourselves, okay? So very important. Study 1 year and doing this year. Wow, you take 1 year to study. Now we do OJT, on job training. That's why those in the Super Investor Club, I hope you are using live money. Where we do the weekly trading, you're using live money, a small amount, at least you get to understand not only how to use the options, but also understand about yourself. There's a difference between using real money and using paper trading. How many of you understand what I'm talking about? If you understand, how many type you? Because when you use real money, suddenly all the logic, right? Wow, the brain thinks at about 0.1%. So it's like suddenly you have to struggle a lot. So the systems, the understanding of the options and position sizing, very, very important. Okay, Ken? Now, let me just go through it and then, okay, today I'll share with you 3 high probability strategy. I tell you, okay, guys, I tell you I'm super, super excited. And very, very funny. Yeah, hi, good morning, everyone. Okay, so I just share you something very funny because I was actually at at my nearby hawker center coffee shop, drinking coffee, looking through my slides. Then there's this particular tribe member lah. Okay, I shouldn't say his name, but I appreciate, you know, he came and then talked to me and said, hey, Sean, can I ask you a question? So I said, oh, sure, ask me lah. Then he asked me about this stock called Riot, R-I-O-T. Any of you guys looking at Riot? If you're looking at Riot, type R. It's okay, I'm not going to scold you. Actually, I'm gonna scold you. Okay, the reason is like when he mentioned this stock, right, it's got to do with Bitcoin. It links to cryptocurrency, and I can sense that when you ask me whether this stock is good or not, it is really what do you call it? It is really a little bit of speculative mindset. It is very speculative mindset, and no problem. We still can make money through speculation. Kind of stocks. We don't know whether it go up or down, right? But I want to go for something more predictable. I personally prefer something that's more consistent, more stable. And when we know that particular stock is going up or particular stock is going down, if we have a high probability, there's no confirmation. But if let's say there's a very high chance, right, we go for it, we can use options to leverage and make a lot more money back. And we can leverage safely. So I just want to share with you guys, if let's say you got the mindset of wanting to, I go in quickly, hit $1 million, then I go out and never touch the stock market again, right? High chance you will burn your ass on. Okay, so I just want to say that let's go for something predictable, high probability. Is that good? If it's good, help me type 1. Okay, help me type 1. So, okay, I'm recording this. I'll be putting into the SIC as well. Okay, quick disclaimer, information is for education purposes. I will show you some of the live trades. I'll show something that I do, but you have to really take your own responsibility. So, okay, I just share with you guys, like the aim I'm trying to aim for is like $1,000 a month, 2.7% a month. So this is something that I do with, for those in Super Investor Club, you all know lah, we are selling a lot of options, getting a lot of income. 2 main ways to make money consistently from options. One is the long options, means that you buy a long-term call. The other one, keep selling options. These two is a very, very I would say predictable, very high probability. Later I'll go through some of them, but I'll share with you all guys some extra stuff. Okay. So okay, and I just want to say okay, something I also feel very proud of super investors and myself lah. Okay, so right now our portfolio account is up by 40%, S&P 500 only up by 10%. So sometimes we don't have to rush it one. We keep doing the right trades. I never aim for 40%. I never aim for 2% or things like that lah, okay? Okay, for 37.73%. But we aim to do the right trades and the results will come. Okay? So remember, aim to do the right trades and the results will come. Don't focus on the results. Focus on doing the right things. Can you help me type right? That RIGT, RIGHT. Did I spell right? Correct? Right. Okay. So you all must aim to do the right things. Huh? Okay. So now let's go back to options 101. Then we will talk through what to do the right things. Okay. So the world of options, right, can allow us to create consistent income. This is something I've been doing for many years. Somehow after I teach people, right, don't know why I teach the same. I really never hide anything. For those who have been following me, you all know that I share every single thing. I share the account, and somehow people can still do the wrong things. Okay, but I believe it's the position sizing. Okay. Okay, yeah. Can I share one more thing before I continue? So I'm going to share with you all guys high probability winning trades, reduce capital and things like that. Okay, I'm going to share something. Sometimes the way that I talk everything will be very exciting. Will be very excited because I feel excited. But excited, I have to still remind you, doesn't mean that the trade is confirmed 100%. Okay, there's no 100%. There's always risk. There's always risk. Can you all help me type RISK? Confirm every investment got risk one. Actually, yesterday we did a trade that have zero risk, right? Okay, but zero risk. Yesterday, I mean, for those in the SIC, we did a totally 100% guarantee trade. When it's 100% guarantee, very hard to get in. Okay, liquidity will be an issue because we are competing with a lot of big organizations. So maybe we managed to get in some of them lah. Couldn't get in, but okay, but no problem. Today's one, this particular instrument maybe can get in. Okay, but there's 100% guarantee trades also one. But let me share with you. When I make it very excited, I share with you all three strategy, right? You all must do position size. Go in 5%. Okay, 5%. How many type 5%? If your capital is really very small, make sure don't go in all your capital. At least break into 3 or 4. Let's say even you got 3,000, go into 3 different trades. Okay, can? Okay, so options, this options 101. So if let's say if it's too simple for you, come back at 10 a.m. Okay, so stocks, we can make money when it's going up, when it's going down. So this is called bullish and bearish. So some key terminologies. When it's going up, we buy the stocks. Is called, what is it called? It's called long stocks. Long. Okay. And then when we actually bet that the stocks is going down, it's called short. So long and short. Okay. So these are terminologies. Start to get used to it. So this is how we make money. Can you buy and then stocks go sideways and make money? Understand? Answer is yes. Dividends. Okay, dividends. But technically, people go for long stocks or short stocks if they think it's going down or up. Now, for options, we can make money when it's going up. Okay, we can have bullish strategies. Okay, we can have bearish strategies. We can have neutral strategy. Now, even if it's ranging, right, we can make a lot more money than just holding onto the stocks and getting dividends because we can sell options. One of my favorite, sell options. For those doing live trades, right, we have been selling options almost every week, making a few $100 to a few $1,000. Subsequently, I'll be going a lot more into risk management because the way we sell options, it is very low risk already. I want to go even lower risk by doing iron condors and slightly more advanced because I assume you all are getting more advanced. For those who are new, we start with something simple first. Then finally, we can go for directional. Directional, okay, this one is the Riot one. The gentleman who asked me about Riot, about Bitcoin, all this, it's like we cannot predict the options that we cannot predict the stock direction. We can use options to create a particular strategy that whether it goes up or go down, we also make money. So there's like example straddle. Later I'll show you guys some examples, okay? But I'll go today. I'll going through some basics on okay, not too advanced. Okay, I'm assuming that most of y'all still quite new lah. Okay, the advanced one. But by the way, I mentioned to my Super Investor Club a lot of time. Advanced strategy doesn't mean make more money. Sometimes the simple strategy is the one that make the most money. So can we all please type KISS? Keep it simple and what's the last one? Simple and steady. Simple and steady. Okay. Some people say stupid. Don't need to be stupid. Okay. Simple and steady. So don't need too advanced. Also can make money one. Advanced gives us more ability to understand the options. Keep it short and simple. Okay. But my webinar 3 hours. Okay, I try to keep it to like 1.5. Okay. So keep it short and simple. Okay. So this is how options can help us make money. So now let me start by going through introduction of options. Because I'm assuming some of y'all don't know. Now, I want to explain short and long first. Okay, so we talk about long. Long means we believe share price is going up. Okay, if share price goes up, we can buy the shares and then we sell high. Buy low, sell high. Okay, this is long shares. Now, we can also short shares. Short shares means we sell high, buy low. Okay, let me give you an example. Okay. Okay, I'm going to use two examples. One is all-time favorite SPY. SPY, okay, if you never heard of SPY before, how many type 0? Oh, so many things. Okay. If you never heard of SPY, don't be shy. You got question must ask. Because the first hour I mentioned already for beginners one. Okay, 0. Good. Okay. Just for you, Sharan. Everybody knows. Okay, no problem. Okay, SPY is a ETF. ETF, right? It's basically you're buying a shares of a company. Okay, every time you buy shares, you're buying a shares of a company. This company is set up. They collect all our money to take this money to go and buy 500 shares, which is the S&P 500. Okay, so S&P 500, when they say stock market goes up, stock market goes down, it's actually talking about 500 shares in the stock market. So S&P 500, right? It consists of you can go and find S&P 500 components. Okay, I'll not read out one by one. Otherwise, it'll take me like 2 hours already. Okay. Okay, so these are list of S&P 500 shares like 3M. I think it's an alphabetical order. Okay, so all these are the shares. But imagine, right? Imagine, let's see. Okay, so imagine your company, you open up your brokerage account, you got 500 of these shares. You got Boeing, you got BlackRock, Blackstone, you got Tesla, you got Microsoft. Okay, all these are inside. So imagine your portfolio got all these stocks. Do you think it's steady or not? If it's steady, you can type S. Okay, can okay, so this is S&P 500. But of course, if you want to go and buy them one by one, I tell you, your nose will bleed. Okay, first of all, the brokerage fee will be a lot. And also, I can tell you that it's not easy to go and buy the S&P 500 like that. Okay, did they show? Okay, these are the top 5. Did they show the top 5? The few stocks. Imagine your brokerage, your account got Apple, got Microsoft, Amazon, Nvidia. All these are inside your account. So instead of buying one by one, you can just go and buy this thing called SPY. SPY is the S&P 500 ETF. Okay, ETF is when you buy the shares, you pay about $500, right? Okay, it's just nice today is $500. Okay, last time you can buy at 300 plus. 300 plus, 100 plus. So as you buy, right, these 500 shares, some go up, some go down, but total, generally, it will go up. Why? Why do stock market generally goes up? Because of inflation, because of a growing company, growing economy. Okay, unless you tell me that 10 years later, the whole world become poorer. We no longer use iPhone. Now it's iPhone what? 14? 15, I don't know. I never use iPhone. We don't use iPhone 15 anymore. Everybody start to use iPhone 10, then iPhone 5, then iPhone 1 because the world goes backward. The world doesn't go backwards. The world goes forward. Every day, every single one of you, why are you attending this webinar? Because you want to improve your life. Everyone, we are thinking of how to improve our life. So collectively, the whole entire 7 over billion people in the world, right, is trying to improve the life. And a lot of them are in corporations, in companies, every day thinking how to make things better, right? So generally, things will keep going up one. Okay, so does it make sense or not? If you are very pessimistic, you say no, the world is going down. Then this theory very hard to explain to you already. But you see, if the world is going down, then there won't be inflation, economy won't grow, GDP is growing. When it's slow growth, it's considered recession. It will grow on. It's naturally growing on. So stock market is going up. Okay, generally speaking. Okay, can understand so far? Can Okay, what you put 15 sorry. Okay, if understand, you how many type you will understand. So this is a thesis that we have. Now the thesis may be wrong. Maybe we are wrong. Then the whole world goes down, then very difficult. Okay, but anyway, so S&P 500 is here. So one way to make money, very nice, okay, is we buy low, we sell high. Then now is it high or low? Now looks like high, right? But actually, you think about 10 years later, probably now is the low. So you can buy now and then you sell later. I'm not asking you to buy now. I think now also okay lah. Okay, so buy now then sell later lah. Okay, now it's 500 plus, goes to 600, go to 1,000. You can sell later. This is how we make money: buy low, sell high. Understand? So this is one way to buy. Okay, so let me just explain here. So we buy here at 400, buy at $400. Okay, then now the share price we can sell at 500, sell at 500. Okay, some of us, we don't sell because we keep letting it compound and grow. They say, don't sell how to make money. Okay, you can sell a bit because you can buy 1 share, you can buy 2 share, you can buy 3 share. Let's say you buy 10 shares. Buy 10 shares, you sell away 1, collect some profit. Okay, can okay, so for long call options expiring in 2 years, not sure if safe. it will be safer for certain reasons if you actually have the correct construct. Later, I'll go through them step by step. Okay, I love the way you're thinking. Is it safe or not? Is it safe or not? Actually, I prefer my investors to always think in terms of that way. Like, wow, this one, how much money will I lose? If anything happens, what happens to my account? I like you to think like that. Because a lot of times I'm the guy who's very excited. Wow, this one probably can make money, but you must ask, what if don't make money? What if this happen? What if that happen? I love it. Like that, your portfolio safer. You take care of the downside. All the rest is the upside. Okay, you probably maybe buy it here. Maybe you buy it here, 450, then all your sian. Or sian means set. Because you buy at 450, can drop to 400. Okay, you can see stock market can go up, can go down, but in the long run, let me show you 5 years. Okay, can you see? 5 years, even if you actually buy before COVID drop, now you already make money already. But of course, it takes a longer time for you to recover. And also from here to here, every single day, you will be quarreling with the person who asked you to never buy in the stock market, correct? Probably your grandmother or your father say, like, told you not to invest already, so invest, and make money already. Oh, okay, not bad. Better than bank return rates, okay? So all this will happen one, okay? So for those who have gone through that, you know that this period will be a tough time for a family where you have to explain to them and they will look at your face and treat you like you're an idiot every day. Okay, so anyway, so this is long run. You can see long run stock market goes up, but there are years where really it goes down, then take years to recover. So it is important for us to do risk management. Okay, can So now, this is long stocks, long. Okay, LS, long stock. Now, can we short? Let me give you an example. I've nothing against this company, okay? But let me share with you something. Example, Tesla. You see, Tesla from 300 plus drop until 100 plus already. Okay, so for those you need a lot of stamina to play with Tesla, so you need to drink a lot of 100 plus and do a lot of workout. Okay, so anyway, for Tesla, you see example, you can actually, okay, in the stock market you can short stocks. Short stocks, right, means you sell first. Okay, I have to explain this. So you short stocks at, let's say now here is about 29. Okay, I put 280. 280. Okay, just now the one easy to understand, right? You buy at 400, you sell at 500. That one easy to understand, right? If easy to understand, how many type? One. Really quite easy. Just not that one. Long stocks. Okay. Short stocks is the one that a lot of people cannot understand. Okay, short stocks. You short at 280, then you can buy back at, let's say, 160. Okay. Okay, so we call it cover. Cover at 160. These are terminologies that all the financial people use to scare other people. Okay, so that we use all these very big terms, then you're like, what? They sound so smart. Yeah. Okay, that's the whole purpose of it. Okay, so let me show you. Example, Tesla. You can see that I do not have any stocks. I don't have any stocks now. But I can actually short the stocks. And let me just shake. And can you see, right? If you go into your interactive broker, if you're not using interactive broker, don't be too worried, don't be too concerned. You can see that here, short stock availability. So must have people lend you the stocks on. So actually, in case you all didn't know, right? For those who buy stocks, just now example, we buy SPY. Do you know after you buy SPY, you buy the shares, right? You can lend out to people. You lend out to people is a very safe one. Okay, when I say very safe means the person have to return to you. So, okay, this one, additional side thing, share lender program. In case you all didn't know, you can actually enter this program, security lender program. There's a lot. Okay, IBK. Stock yield enhancement program. Okay, they call it stock yield enhancement program. So what it means is, right, you can actually trade your loan stocks. You can, okay, you earn supplementary income. You can lend your shares. Do you know that? How many of you first time hearing this? The first time hearing this, type me. Today you learn something new already. Actually, you can buy stocks. Then every year you can make maybe another 5 to 7%. It can even be 9%. So just by holding on to the stocks, you get dividends 2%, right? You lend out the shares, you get another 9%. So without the shares moving, you get about 10 to 11%. Not bad, right? Another 10% dividends. Okay, so please check out this. You can just type share standard program or stock yield enhancement program. SPY, all these stocks people sure like to borrow one. They borrow the stocks to do what? They borrow the stocks to short. Okay, so you can see here then the current fee rate. So 0.413. Wait, 0.413, how many percent? 0.41% per day. If I'm not wrong, it's by per day. So every day, you borrow the shares, you must pay some interest. Understand? Okay, so 0.41. Let me just calculate. 0.41 multiplied by 365. It cannot be. It's 0.1. Yeah, measure wrong. 0.413 multiplied by 365. 100. Got so much, man. Wow. Okay. Okay, probably I calculate wrongly. Okay, but there's certain amount to actually charge on. Okay, so understand so basically you can short shares, but let me explain to you how you short shares So you go and borrow shares at 280. So let's say you borrow 100 shares from brokerage. Okay, actually it's borrow from the market. You know that you're borrowed from someone else already, but the brokerage will facilitate. They will lend you the 100 shares. Okay, and then you sell at 280, right? So if you sell these shares at 280 and 100 shares, right, you will see that your account suddenly, your account will have $28,000. You know how $28,000? Because 280, you go and sell the 100 shares. If I sell something, I collect money. Okay, I collect money. Huh? But how come you collect money? You don't even have the shares. I borrow from someone. I borrow from the brokerage. I say, hey, let me first. So let me this, let's say these shares. Okay, I go and sell to the market. Market price is 280. I go and sell 100 of them. I collect $28,000. So if I collect $28,000, okay, I borrow 100 to sell. You see that my brokerage, right, will say minus 100 shares, minus 100 Tesla. So they will show minus 100 Tesla because I owe them $100. Okay, so far this is called shorting. So I will cover it back. Cover it back means I have to actually return. Okay, I have to return. You borrow things, you will return, right? Do you all? I remember last time I got a classmate lend my eraser, haven't returned. So that guy, he still owe me. If I charge him interest, maybe now he owe me a few $1 million already. Okay, something like that. Okay, just kidding. Actually, I'm the guy who borrowed the rubber. Okay, so when cover back at 160, right, means I have to buy back. I have to buy from market, buy back 100 shares. Any condition to borrow, no, you just pay interest. So as long as they allow you to borrow, you can just borrow. So you have to buy. But anyway, for you don't need to borrow. You just click sell can already. When you click sell, they will automatically help you borrow. All the administration is done by the brokerage. Okay, can So you buy back 100 shares. You buy back at what price? 160. Buy back at 160. 160. So if you buy back at 160, right? If you buy 100 shares at 160, how much must you pay? You have to pay $16,000. Okay, $16,000. And then how many shares you have left? You have 0 shares. Okay, why you have 0 shares is because you buy back to pay the brokerage. So your brokerage will show no more Tesla. Okay, you minus $16,000 from your account. But remember, you already collected 28,000. This 28,000 was previously they give you one 28,000. So in the end, how much do you make? 28,000 minus 16,000. Simple mathematics. How you know? So it is also calculating 12,000, right? 12,000. Wow. Easy money. Use no money to make money. Okay, so this is if the price goes down. If the price goes up, okay, if the price goes up, what happens? Okay, let me just test you first. There's no such thing as confirm guarantee make money. Okay, if the price goes up to let's say 400, what happens? Okay, you have to cover at 400. Cover at 400. Okay, if price goes up, so you buy 100 shares. Okay, equals how much? You have to minus $40,000. Okay, so initially you already collected 28,000, so you don't lose 40,000. So you will lose also 12,000, right? So you lose 40,000 minus 28,000 equals 12,000. So 12,000. Okay, understand also this is shorting shares. If you short the shares, goes down you make money, goes up you lose money. Cannot. This is shorting shares. Now you can see that if the shares price goes a lot way up, right? Well, you lose a lot of money. So let's say you have to cover at 500, you lose even more money and so on. Got it? 500, you lose 50,000. You have to pay 50,000, then you will lose 22,000. Okay, can? So this is long and short. Long and short. So long, you make money when price goes up. Short, you make money when price goes down. But if they go against you, you lose a lot of money. That's why I will bring you to the next topic called options, because options will limit your risk. Okay, can? Do you have to pay first to sell or to short stocks? You do need to have certain amount of, you cannot like brokerage inside no money, then you straight away go in and do that. Cannot. Because they expect you to cover back the stocks. So example, let me explain to you. Let's talk about no margin. Let's say you put inside $30,000. Okay, you put inside $30,000. Okay, example, you have $30,000 of shares, $30,000 in your account. Then you short Tesla 100 shares. Let me think. Yeah, you short Tesla 100 shares. Okay, maybe not 30,000. Let's say you have $22,000. You have $22,000. Imagine you have $22,000 and you short Tesla 100 shares. And then the brokerage, they are not silly on it. They know that you only got $22,000, right? They are only willing to let you lose up to $22,000. So if let's say, right, the share price start to go up, they see that you already lose 22,000 already, which is no more money in your account already. They will start to say, hey, you better top out your account, otherwise we will close the position and then you lose the money. Okay, so they are not silly one. Cannot be from $0 make money on. can you use the $28,000 received to make money before you cover? Answer is yes. The answer is yes. So when you short stocks, you get the money, right? You can actually do it. Okay, Ken? You all don't know how to use computer to trade IBK. Okay, later I'll do some demonstration. But after a while, you realize it's about the same. Okay, Ken? So play around with it, get used to it, click here, click there, lose a few $100,000, then you'll know how to use already. Okay, I'm just kidding. Okay, so this IBK example, you want to short Tesla shares. Okay, this is the shares. You click sell. So I have no shares, I will short the shares. Okay, sell order, minus 100 shares, this is the price. Okay, then after I can click. If I click here sell, then I have to borrow shares already. Okay, but I'm not going to click because I don't want to short Tesla. Oh, you got it? Ken? Options. Okay, no. Options, that's the good thing. No, so options and margin call. Wait, options. Options is a lot safer. So let me go to options already. Ken? So now, guys, let me share with you. This is if you think that stocks go up, you long. If you think that stocks go down, you short. So now, this is options. Let me introduce you to the world of options. Options, follow me on this because now there's a few boxes. Options, there's call options, there's put options. Two kind of options. So let me share with you all this. Okay, let's go to the options. So IBKR. Once you go inside there, you click on options, you will see the stocks is up here. Stocks is here. You can buy and sell the stocks. The stock price now is 178. Now options, if you scroll down, can you see there's call option, there's put option. So what I like to actually you guys imagine is the stock is in the stock exchange, New York Stock Exchange. New York Stock Exchange is in New York. Okay. Now options is in Chicago Board of Stock Options Exchange. So options is two different buildings. I want to make it a little bit more visual so that it becomes clearer to you. Now in that building of options, Chicago Board of Options Exchange, right? You can see call department and put department. Imagine there's two tower, tower 1, tower 2. Okay, can So I'm using a desktop version. Yeah. So there's tower 1, tower 2, there's the call tower and there's the put tower. And these two towers got nothing to do with each other. When I say got nothing to do with each other, right, it's because sometimes we're very, very confused. They say, oh, if I buy a call means that actually someone here is selling a put. No. Call is call, put is put. It's two different things. Understand? So I'm going to focus on call first. A lot easier to understand. Yeah, let me focus on call first. So let's focus on call. When you go into a exchange, okay, exchange, right, it means that you can exchange. You can buy and sell things. Okay, it's like a market, stock market, options market. Market, you can buy and sell things. So let's go into the Chicago Board of Options market, the market, and then we go to the call department. Means that we can buy and sell call. We talk about call first. Now, when you look at buy and sell, right, you will see this thing called bid and ask. Bid and ask means people are bidding and asking for that particular stock. Okay, Irina, if you don't know how to set up IBKR, please ask IBKR. I feel that my value to you is not to teach you how to use the brokerage and set things up. My value to you is to help you find the best strategies. You know what I'm saying? Because set up IBKR really can find from YouTube one. Do me a favor, you go and really go and learn it. Because for me, I rather find the strategy to help you make money. Does it make sense or not? If I go and talk about IBKR setup now, it will take me probably another 3 hours. Maybe 1 hour. Okay, can help me be a bit more proactive? If okay, help me type okay lah. Can? So this is the setup. Later I show you different brokerage. So you can see this is Think or Swim. Think or Swim requires you to be an accredited investor. Means that you need about $2 million to show them that you have 2 million in your bank. Then they will allow you to open this up. But can you see it's the same one? Okay. So I just want to assure you that most of it is the same one. I'm not trying to not care about you, but I feel that really this session is to mainly talk about strategy. So don't worry, if you really cannot understand all this, take the later the recording, those kind of things. You take notes of it. Then after that, go and learn how to use it. But you can see I understand first time use maybe a little bit, a lot of things to manage on. Okay. But you can see, let me show you. Can you see? Stock price, 179. Stock, okay. Different brokerage, a little bit different. Okay, haven't update because market close already. Can okay, using web portal or handphone is easier than okay. Different people like different thing. You use the handphone one, later your finger fat, you press wrongly, then you get the wrong. Okay, depends on your phone how big. Okay, but you can see there's a stock and then there's the options. Can see or not? So options, there's the call option, there's the put option. Typically they put like that. Call is on the left, put is on the right. So far can you see? Okay, can So now actually I should show you guys a particular stock that I like a lot. So I share with you one of my favorite stock. Hey, by the way, you all must own self do homework. Can Charles Schwab, now it's called Charles Schwab. Yeah. Okay. So one of my favorite. Oh yeah. Cabinet investing, you talk about IBK. Wow. There's really a lot of ways to do it. Wait, sorry, hang on a minute. BRK, Berkshire Hathaway, B. Okay, BRKB, New York Stock Exchange. Okay, so this is Berkshire Hathaway, okay. So Berkshire Hathaway, it is Warren Buffett stock. I mean, this guy really make money for so many years. Why we want to be so Hao-lian? Why we want to be like think that we can be better than him? Okay, I mean, I think we can be better than him, but I think that over the years, because he has been proven to be able to win S&P 500. So let me show you this. So just now we talk about SPY, right? SPY generally goes up, but let me show you. So if I compare to SPY, let's see whether he got beat it. Okay. Sometimes they beat, sometimes they never beat. Okay. So you can see, let's say if it's a 1 year, is it 1 year? Okay, 1 year, or 1 year they lose. Okay, so doesn't matter. Year to date. Okay, year to date. So year to date means starting of the year, BRK, Berkshire Hathaway makes about 14%. S&P 500, SPY, if you buy the ETF, makes about 12%. 12% not bad, huh? Okay, but anyway, I'm saying that this particular stock, right, is going up, up, up. Okay, so now let me show you, right? Let's say we want to long the stocks. Remember, we talk about longing the stocks. We long the stocks means we buy the shares and then we sell it later. Okay, so let me give you an example. Okay, just follow me on this first. I show you how powerful options is. So, okay, can you all see? Follow my mouse. BRK, this particular entry, right, is about 320. So when the stock price is $320.31, can see when it's 320, where is it now? It's quite some time back already. Okay, 320. No, here. Actually, not quite some time back. Around here. Okay. Oh, okay, here. 320. You can see somewhere around here, 320. I entered okay, because breakout from the resistance. Okay, entered 320. Okay, around here. So you can see, right now the stock price is 407. So how much do I make? So okay, I'm talking about 100 shares. Let me show you guys this. 320. Now is 407. Can you see that I make about 27%? So is 27% a good results for how long is that? 320. About 1 year. About 1 year. Yeah, it's about 1 year. 1 year make 27%. Your think is good? Bad? Okay, what you think? Okay lah, not bad lah. Actually consider good already lah. If you go and tell other people, if my fund make 27%, people think that you're a genius already. Okay, so 27%. Okay, but this is actually buying the shares. Now, another thing you can do, right, is you can buy option. So you can see I plus another 320 call. This is the same period. Okay, for those who have been following me for a while, you all know that I do this one because every time the share price around 320, instead of buying the shares, I buy the options. Okay, what do I mean by buy options? So buying options, right, typically I like to buy a long-term option, long-term. And you can see there's 600 over days. So by the time when I buy it at time, probably it's like 1 year ago, which is about probably 700 days, 900 days. I buy a very, very long-term options. Okay, So, okay, now, you look at this. Buying options, right, what it means is, okay, I'm going to write it down here on the graph, a lot easier to understand. Okay, Ken? So let me put here 320. The stock price is about 320. Okay, here. Oh yeah, it's around here. Oh, I entered support, not resistance. I also couldn't remember. Okay, so 320. This was about the price at that point in time. So now the share price go up. Okay, how do I know it'll go up? I also don't know one. It's also guessing on. Okay, but guessing with a certain amount of probability because it's a very strong company that has been going up. Okay, plus the fundamentals is strong and it's run by Warren Buffett. Okay, so 320 is here. Now instead of buying the shares, so scenario 1, buy 100 shares. Okay, I'm going to draw it on the chart so that it becomes a lot visual at 320. Okay, actually it is at 320.31. Can okay, so what is my capital? So I paid $32,000. Okay, pay $32,000. Now another thing I can do is this. Instead of buying the shares at 320, okay, scenario number 2 is I buy a call. Okay, buy 1 times 320 call at, let's see how much. Okay, later I'll explain to you what it means. Okay, I buy the call at 38.21. Can you see 38.21? Okay, 38.21 times 100, how much is it? 38.21. Hey, you all pay attention now. Okay, so 38.21. So 3,821. Okay, so this is how much I pay. Okay, when I pay this amount, right? Okay, this 3,821 is called premium. Okay, I pay this amount. Okay, I pay this to get a 320 call option. So okay, what does it mean? When I actually pay to get a 320 call option, now I have the rights to buy shares at 320. Okay, I have the rights to buy 100 shares at 320. Okay, one contract of options equals to 100 shares. Okay, this is something that is a basic portion. You have to memorize it and you have to just remember this. Can So it is very, very useful to us. It's very useful to us, guys. Here comes the magic already, can? So you can see, right? Actually, what am I doing? Let me shift this away. So when I buy this 320 call option, right? What I do is I put a deposit. Okay. So I put a deposit. I say, hey, brother, I want these shares. Okay, brother. Let's say can be brother, can be sister lah. So I'm not saying only guys can invest or ladies can invest. Okay. So let's say I say, hey, brother. So this guy got shares. Imagine this guy got 100 BRK dot B shares. Okay, he got shares lah. Okay, and let's give this guy a name. Okay, I'm gonna call him Kim Jong-good. Okay, Kim. Okay, never mind, Kim. Okay, so Kim is a guy, girl. Okay, doesn't matter. Okay, so Kim got 100 shares. So me, I go and tell Kim. I say, hey, Kim, brother, sister. Okay, your 100 shares, right? I'm interested to buy your 100 shares. Okay, then he say, okay, you want to buy my 100 shares? 320. Then you pay me 32,000. So you pay me 32,000 to buy these 100 shares. I say, hey, but I need some time to get the money. So is it okay? I put a deposit. So I put a deposit of 3,821. Okay, I put a deposit. Then I lock in the price. I want to lock in the price. Can you see? So essentially, when you buy a 320 call, you lock in price at 320. So what can you understand? So this 320, right, is what in the options where it's called strike price. Can you please help me try strike price? So okay, I'm going to toggle between the brokerage. So the more you see, the more you get used to it. Because I know some of you guys very, very new to it. Okay, it's called a strike price, but you can choose 320. Okay, can all? So far, are you following me? Can You can see there's 320 strike price. There's the various strike price. Okay, that's very good. Okay, the good question is why one becomes 100, right? Is because every contract of options is always talking about 100 shares. This is the rule. This is a rule one. You ask me, can be 77 or not? Because my favorite number cannot. Okay, so for Chicago Board of Options Exchange, every one contract is inside the contract is a package of 100 shares. So let me just share with you this. So example, okay, just an example. Let's say I go and buy a call right now. This is Tesla. Okay, BRK/B. Okay, I'm going to illustrate for you to let you see what happens. Okay, then you see if I actually buy, there's a bid ask spread. I go and buy. If I go and buy a 320 call, can you see 320 call? Okay, different brokerage they will show slightly different. Sorry, did I just click? Okay, never mind. Let me do again. Market not open. Don't worry. Okay, I click confirm and send. Can you see? Look at my mouse. Can you see? I'm buying. Oops. Sorry, I need to change to one. I'm buying one option. Okay, I buy one BRK 320 call. And can you see a word 100 here? 100 means 100 shares. It is a rule. Got it? If okay, help me type 100. For strategy X, you are taught to buy minus one strike price. Around there. Because the price is 320. Can you see? Back then the price is about 320. So I buy a 320 call. It's slightly below. Because actually the price back then, the actual price, when I enter the call, it is actually 320.31. So one strike below, right? But actually now we are going a little bit more sophisticated. We use delta and things like that. But never mind, I keep it simple first. So far, can you understand? I put a deposit to lock in 100 shares. So when the share price goes up, what happens? Now the share price goes to 400 already. So let me ask you this. This Kim, right? This guy, right? His 100 shares belong to who? Belong to Kim, K, or belong to Sean, S? Belong to K or S? KS. Wow. It's a Singaporean. Belongs to me. You know what or not? Because I lock in the price already. So, okay, actually, I ask you a very simple thing. So you see, Sean buy 320 call. Okay. So Kim sells 320 call to Sean and collect how much? He collect $3,821. He collect this as premium. So this money, right, he can go and pocket, he can go and buy the latest MacBook or whatever. Okay. You see, he already collect the money. He collect the money, he sells to me, I buy this 320 call. So essentially his 100 shares, right? He cannot do anything to his 100 shares already. He can do 0 to his 100 shares. His 100 shares is there. I put a post-it note there and say that this is my shares. You cannot touch. So he cannot touch until when? He cannot touch for the next 600 over days. Okay. In fact, when I buy at time, it's probably 900 days. Got it? Can Kim refuse to sell later? I will call police to catch him. Okay, cannot. Because his contract. Okay. You think this what? This is not third world country. This is in Chicago Board of Options Exchange. So these options is a contract. He cannot break the contract one. He cannot. Okay. Okay, actually there's a lot of things can do, but I keep it simple first. The answer is cannot. Got it? I haven't got watermelon one. Okay, can buy a call with shorter expiry. Can. You can do that. But make sure when you buy a call with shorter expiry, today that's not my main topic. Okay. Make sure minimally. Okay, I show you all why. Later I show you all why. Minimally goes for at least 300 days and above. More than 1 year. Okay. Now let me explain to you why first. Okay. But I love this question. So but before the expiry one, please remind me. I want to explain to you in a moment's time. But can you see that right now I make money already? Because I lock in here. Back then when I lock in, I cannot see anything one. I didn't know you'll go up one. Okay. Back then it looks like this. Back then it looks like this. Okay. It goes up. Don't know whether you go up or down. Got it? Make sense or not? So back then, when I enter at time, you don't think that I already know the price go up. I don't know one. Okay, but now it goes up already. Boom, goes up. Then Jose means good job. Okay, Ken? Got it all. So the price already went all the way up. Okay, Ken? So now the price goes all the way up, right? Let me ask you something. So this shares actually is mine. So what can I do? I can sell the shares at 400 plus. And then I actually can buy from him at 320. So I can take the shares at 320, I can sell at 400. I make $80 per share. Is it the latest price? So far, can I understand? Because now I have a contract with him. So options a little bit more advanced, a little bit more sophisticated. But because of that, right, we can use a lot lesser capital. Instead of using 32,000, I'm using 3,008. I use about 10%-ish, 15%, 10%, around 10, 12%. Got it? I use a lot lesser capital. It's like you buy a house, you don't go and take the cash and put everything, right? You also put a certain deposit, right? Make sense or not? When the price goes up, when the share price, when your property price goes up, wow, you make a lot of money, because why? Your initial capital is not very high. There's a very high leverage. Got it? Can you sell shares before the contract expires? You can do a lot of things, but I don't want you to think about. Okay, so you can. You have the rights. Okay, you pay money, you have the rights. Okay, got it? Guys, let me show you something. But then you don't have to go and touch the shares one. Don't touch shares. Okay, don't. Okay, so in the options world, let me show you this. In the options world, can you see this? I have the rights, right? I buy the options. I can click right. Okay, in the options world, it's called exercise. Okay, I don't want you to exercise option. I want you to exercise in the real life, but don't exercise option. Can you all please type no exercise? Never exercise. Never ever in your life exercise an option. Never. Okay, I will not go into details why, but the key thing is when you exercise option, you lose away the time value of it. You lose money. You exercise, you lose money. Now, so what do you do? Say, hey, but like that how? The share price goes up already. What do? You can sell away the options. So what do I mean? You see, I buy options. I have the option, right? So this particular cute little receipt that I get from Kim, imagine when I put the deposit, he give me a receipt. This receipt is called option. I can sell away. Look at this, guys. Initially, my trade price is 38.21. Means that I spent 3,821 to buy the option, right? Now that option I can sell away. If I sell away now, I'm selling away the option. I have the ability to buy shares at 320. Last time, long time ago, 1 year ago, the share price is 320 and I buy the ability to lock in at 320. So nothing much. I mean, who wants to... Now the share price is 320, I can buy at 320, it's not worth anything. But as the share price goes up to 400, now the share price is 400 and I can still buy at 320. Can you see that I become a lot more powerful? If you all can see that, please type yes. Got it? Yes, you only need you don't need to have 32,000. You only need 320 because we are never going to touch the stock one. For this particular instance, we're never going to touch the stock. So if it's more powerful, if this thing is more powerful, definitely it's worth more. Cannot be this paper still worth 3,000 plus. What? This paper, when I say paper, these options is worth a lot more. Worth how much? Very simple. It's worth, okay, let me just confirm. The share price now is 408, right? Is it 408? Because just now okay, it's 40. Okay, now the share price is about 407. Okay, so actually, right, sorry, how come my Berkshire Hathaway gone? Wait, I clicked on the wrong thing. Wait. Okay, let me tell this. BRK. Okay, so let me show this. Okay, now the share price is 407, right? And I can buy shares at 320. If I can buy shares at 320 and I can sell at 407, how much money can I make? I can make about Okay, actually I can make about 8,000 plus. Make sense or not? Can you see? I can make about 8,000 plus. Can see that, no? So if I can make about 8,000 plus, right, these options, the value should be worth at least minimally 8,000 plus. If I can make 8,000 plus using this paper, it should be worth at least 8,000 plus. So let me show you how much is it. You can see it is worth 119, meaning you say it's worth 11,000. Why is it worth 11,000? It's worth 11,000 because there's still 600 days. So it is something that I can still continue to let it go up and then still got a chance to make even more money. So it's not just worth 800 plus, it's not worth 8,000 plus, it's worth 11,000 plus. This is a reflection of how powerful this option is. Initially, it's worth 8,000 plus because I can lock in for almost 3 years. If I lock in for 3 years, they say, it's very powerful. Once you lock in the price, the power of this option is worth about 3,000 plus. But as the price goes up, the power of these options becomes more and more powerful. Okay, so you can see, guys, look at this. Again, if you're very new, just follow me along. You can see I can buy the options. I already buy the options at 3,000 plus, 3821. I buy at 3,000 plus because it's always times 100. Okay, every options is multiplied by 100. Okay, this is the rule. It's just a rule. Must remember one. So now I can sell it at 11,000 plus. So how much do I make from these options? Okay, these options I make 8,000 plus also because I told you already, the value is about 8,000 plus. Make sense or not? So you see, if I buy 100 shares, this one I should just okay, if I buy 800 shares, let me just close this. I think I accidentally. Okay. So if I buy 800, if I buy 100 shares, I make 8,000 plus. Can see or not? If I buy one option and the price also go up it must go up, I also make 8,000 plus, but a bit lesser. Why is it a bit lesser? It's because I have to pay for these options initially. Understand so far? Okay, so the value of the options goes up. Okay, but you all see something very beautiful, guys. In the end, I don't get the shares, right? Yeah, we don't get the shares. We don't touch the shares. You touch the shares for what? Your main job is to make money, right? Are we all aligned? If you all are aligned to make money, can you all type the dollar sign? But if your main job is to collect shares and take over the whole entire company, then different. You say, I don't like how Warren Buffett run this. I'm going to buy over the whole company and then I'm going to control it. Then it's a different company. It's a different thing. For me, I'm not teaching that. I'm teaching how to make money only. Got it? Okay. I love the questions. Why we go down? You all must ask me this kind of question. Okay. So, we can buy 100 shares. We lock in 100 shares. We lock in. Got it? No. Okay. So Sean. All Sean's are very good, smart. Okay. So Sean, I tell you this. Actually, we are okay. So you must understand. Explain to you, guys. There are stocks investor and there are options investor. Now I want you to think as if we are option investor. Okay, you can also do stocks, but options give us a lot more advantage. I show you why. Stock investor, their purpose is to buy shares at low price, 320, and then sell shares at high price. That one can understand? You can understand how many type S for stock investor. Can? Option investor, listen carefully. Our aim is to buy option at low price and sell option at high price. So we are doing options only. We don't touch stocks. Can you all tell me type O? Understand or not? So we buy options cheap, we sell options expensive. That's all. Are we going to exercise, have the stock and all that? Answer is no. Is it clearer? Is it clearer? We don't touch stocks. No exercise for options. Go and do burpees. Okay, later 10 a.m. we go and do some workout. Can Yes, think of options as the particular asset itself. So we only buy, sell options only. Can Okay, great. So if stock goes up, okay, let me show you this. This is the most beautiful part, which I'm glad that you're asking this question. Okay, so I want you to compare. Okay, so 100 shares, that time we buy is 320, right? 320. Okay, so if I buy 100 shares, what's my capital? $32,000. Remember, but my call options, how much is 3,008? 3,008, right? Okay, so I want to see what happens if we make money, what happens if we lose money. Okay, so this is the part that I really like a lot, and why I love to use options as a way to invest now. Okay, let me see. So the share price now is 407. Okay, share price goes to 407. Later we check what happens if share price goes down. Let's say it goes to 0. I'm going to take worst case scenario. Okay, so now if share price goes to 407, my stocks make 8,705. 8,007. Oops. What happened to my mouse? Okay. 8,705. You understand why, right? Actually, 8,700. Okay, around there, around there. You know what I'm saying? Rounding error. Okay, because it's actually buying at a 302.31. So this one can understand our stock price. And then how much do I make? 27%. You all know how they get 27%? 27%. It's basically your capital is 32,000, and then 32,000 already make you 8,000. So you get 27%. Got it? Okay, can? Yes. So later I share with you all. Now what time is it already? Time check. Okay. I'm a little bit behind, but don't worry. So this is how much I make from stocks. Now from options, how much do I make? Call options, I invest 3,008. And my profit now, if I sell away the options, my profit is 8,164. 8,164. Okay. So what is my returns? You all see, maybe I ask you a question. Will you rather use 32,000 to make 8,000, or will you rather use 3,008 to make 8,000? You'll rather use options or you'll rather use stocks? It's like no brainer, right? Okay, the returns is 213%. Wow, sounds impossible, but it is what I mean. This is what we have been doing for years already. Okay, so you can see what's the risk. Let's say if the price goes to zero, let's say crash everything. How much do you lose in stocks? You will lose 100% in both. You lose 32,000. But for options, maximum you lose is 3,008. Okay, so this is the part that I love the most, because actually options gives us higher returns on investment, but a lot lesser risk. Why is it a lot lesser risk? Because we commit a lot lesser capital. Can you see that? So options, it is amazing because once we enter into options, we can calculate how much we can lose already. Maximum we lose 3,008. Put down there, if make a lot, if lose 3,008. It can be even cheaper, can be 300, can be 400. How many of you can see the power of options? Now, what is the downside of options? What's the downside? If we are earning all this money, who is losing? Okay, let me show you. This guy, this Kim. Okay, I want to share with you all something. This is something, I mean, I don't know whether you all can accept it. You're not wrong. Sometimes in the stock market, when you're making money, someone may be losing money. Are you able to accept? Are you able to accept? Now, in the real life scenario, actually this is real life, real life scenario, if you think about it, even options or stocks, I use stocks to explain first. Now, if I invest into Berkshire Hathaway, I'm the investor, right? I buy the shares at 320. I'm buying from somebody who is selling to me, right? Right. Who is losing? Did he lose? Did I lose? Actually, maybe that person, he bought at years ago. Maybe years ago he bought at $100. He bought at $100 and then he hold and hold and hold and hold. Then his children going to university, so he needs the money. So he sell then he sell to me. Then now he sell to me, then I buy, then I continue ride up. Then I sell to someone else. Okay, so if you think of it as a fairyland ideal scenario, actually everybody is winning. So Berkshire Hathaway is winning because initially they need the money to invest, so they get investors to invest in them. The investor buy already, value grows, then sell to the next investor. Maybe can. So maybe in some sense nobody needs to lose also. But are you able to accept that sometimes maybe people will lose one? Can. Okay, can. Is it possible to have the winning probability before entering options? Answer is totally yes. Okay. So, okay, guys. So in fact, I'm going to go to that already. But so far, can you understand how powerful options is? Now, so let me show you this thing called a risk graph. This is something that I really want everybody to learn. And once you understand the risk graph, right? Okay, but it becomes a lot simpler. So this is called Option Strat. It's a free website. How to close option depends on your brokerage. Okay. But usually you just click close, they will close. So example, you can see here, right? You can see here, you double click, okay, create closing order. Then initially you buy, now become sell. So you can also just click sell, just click sell. Okay, you don't have sell. Okay, but basically you go and sell back the same options. Okay, usually in your portfolio, okay, you can right click then close. There will be this button called close one. So even IBK also have. Okay, can. So again, do me a favor. This one you all must go and learn how to do it. Otherwise, I will have to spend a lot of time doing all this. Okay, example, this one, call option, Apple call option. If I right click, don't right click, sorry. Example, call option, this one, Apple, you can see make $400 already. I right click here, I can click close. Close, then they will come out with the order. You click, close already. Get it? Then I start to make money. Can? Otherwise, it's just paper gain. Paper gain. Got it? Is it okay? You all must go and learn. Must go and learn. Okay, so okay. Anyway, I come back to option strat. Now, option strategy, follow me on this, is a free website. So you click on build, you click on long call. Long call means we buy a call. Long means we buy. Now, let me share with you all something first. Okay, let me add stocks first. Oops. What's that? BRK, right? BRK. Okay, I'm going to do BRK. I show a comparison, guys. So I'm going to buy shares. I'm going to take away this. I hope it's not too fast or anything. So far, is it okay? Is the pace okay? Yeah, click close better. Options, you click close is better. If you click sell, I scared later you open up another another position. Then it will be very sad. Okay, so click close is better. Later, if I have time, I show you some more examples. Oh yeah, I will later I'll show some examples. Okay, guys. So let me show you this. This is called a risk graph. How many of you totally first time seeing this? If you're first time seeing this, type 1. Super investor, if I see you type 1, I will come to your house and I will strangle you. Because we've been doing this every single week. Okay. Yeah. Actually, for Waylin, options we will never let it expire one. We will not let, if we buy the options, we won't let it expire. We will close it when it hits a certain price. Okay, but today that's not my strategy, okay? But I share with you, this one, usually options, okay, but a few key rules, or later we haven't talked about why long-term one, okay, but let me show first. I finish this portion, then I should be able to tell you why we buy long-term options. Okay, so look at this, this is called long stocks. Long stocks, I long 100 shares at 407. This one is buy shares, buy shares. Got it, buy shares. Now, if I buy shares, this is what the risk graph look like. The risk graph, again, your brain practice a bit. Okay, it's very good. Doing options, I love it. You know why? Then you don't get dementia because you have to think a lot. Okay, so you can see the price of the shares right now is 407. Can see, remember 407? Can you all please type 407? Yes, when we sell option, we let it expire. When we sell, we let it expire. When we buy, we don't let it expire. Later we talk about selling. Now it's all buying first. So okay, can you all see 407? Remember 407? Now you all see, right? If I buy 100 shares and the price goes up from 407 goes to 507. Where's 507? Wow, so far. Okay, wait. Wait. Oh, too far already. Okay. From 407 goes to 417. Okay, you can see 407. Follow this dotted line. You all see my mouse. This dotted line is $0. If the price don't move, I don't make money. If the price move, I start to make money. Can you see that? So from 407 to 417. Let me go to 417. How to know 417? Look at the top. The top is the share price. So this is the share price, and then this is my profit. Can So at 417, I will make about $1,000. Can see 407 to 417, I make $1,000. So risk graph shows you as the price move left or right, your profit will it go up or down. So far, can you understand? If can understand, I ask you, So if let's say the share price goes down, you see goes down means go to the left. If from 407 becomes 397, how much money do I lose? From 407 goes to 397, how much money do I lose? Calculate a bit lah. Well, Saturday morning make me do this kind of things. Yeah lah. Okay, so from 407, wait first goes to 397, about 397. I lose how much? I lose $1,000. I lose about $1,000. It's talking about 100 shares. Can you see? 397. Can or not? Are you following or not? Oh, this one another topic already. Kim stay. I won't be able to go through this. But later I'll teach you a strategy that don't need fundamentals on. Can? $10 per share. Can? So understand? So share price drop. See from 407 drop until 200. I lose more money. The more share price drop, the more money I lose if I buy shares. If I buy shares, the worst case scenario drop under zero. Drop under zero, I lose everything. So far can make sense, Make sense, Then it can go all the way up, I make a lot. Goes down, I lose a lot. So far can understand? If okay, how many type? Okay. Can okay, now, so this is long shares. Now let me show you what happens if I long call. If I buy a call instead of buying a shares. Now, if I buy a call, right, this is what it looks like. Okay. You see, now the share price is okay. Now, actually, I put until today. Today's okay. I put like a few weeks. This is what it looks like. Now, to buy this long call, example, I'm going to make it a little bit easier. Okay. Just now we pay about 3,000 plus, right? Okay, so 3,008, right? Okay, so let's say I buy a you see, I pay 3,008. Okay, let's say I go for 400. Okay, 400. A 400 strike price call. Okay, why 400? Just now I put 320, right? Because now the share price is already 400 something already. So let's say I buy a 400 call. When I buy a 400 call, what does it mean? It means I lock in the price at 400. Makes sense, right? Okay, it means that right now, I can lock in the price at 400. So I put deposit and I say, hey, Kim, don't be sad I still want your shares but now I want to buy them at 400. Understand So if share price goes out next time, If share price still goes up, I can lock in, I can buy at this price. So if I can buy at this price, as share price goes up, this particular option become very, very valuable. Understand? So this is a call. Okay, 400 call. So far can? Oh, okay. You're asking a lot of very good questions. Unfortunately, I will not be able to answer all of them. Now, this is not accurate one. This really not accurate. They use this thing called normal distribution. Later I'll show you a video on it. Okay. Okay, I'll show you a video. Okay, I got 1 more minute to finish my options 101. Okay, so let me show you this. Okay, look at the option strategy. So because you can see, okay, once you're in option strategy, please play with this. Option strategy is a very good website. It's free. You can buy the premium version. I don't have affiliate link. I should have created one, but doesn't matter. So you can see this one, I buy a 400 strike price call, okay, and I pay $3,835. I pay $3,835. So it's called a debit. Debit means I have to pay. So if I pay this money, right, can you all see this? Just now, if you all remember, for shares, when the price goes up, you see, goes up is on the right side. If it goes up, you make more money. Can you see? For options, if the price goes up, I also make more money. Correct or not? Buy at the money. Okay. So slightly in the money. Okay, can you see? When the share price goes up, I make money. But when the share price goes down, just now remember, right? When I do a stock, when the share price goes down, the more it goes down, the more money I lose. But for options, no matter how low it goes, the maximum I lose is my premium. This is the most beautiful part about options. How many of you agree? If you agree, how many type A? Because once you go inside the trade, this is the max I can lose. I won't lose anything more. So okay, if you are a little bit more seasoned already, in fact, right, let's say right now, I really want to go and buy a BRK. BRKB. Okay, I see. Okay. You can even, okay, so example, I will ask you all to, okay, so this one, BRKB, I'm going to buy a 400 call. Okay, now it's 407. I can buy 40, anything below, slightly lesser is okay. So you can see 41 days, 55 days. Let me show you why I go for long term. Okay, this is a little bit of a more options Greeks. It's called options Greeks. It actually helps you a lot. Okay, there's delta, there's theta. Theta, how many of you never heard of theta before? You never heard of theta before? How many type 0? If you heard of theta before, how many type T? Okay, every single day, right, that you are holding on to the options, it is expiring. Make sense or not? It's expiring. Because let's say you buy let's see, you buy a 6-day options. You buy a 6 days options, next 6 days later, right, the option becomes 0. When it becomes 0, it's worth nothing already. You cannot, your power has gone. You have 6 days of power. Tomorrow you come back and see, it will be 5 days. Then it will be 4 days, 3 days, 2 days. So every day you are losing the power. Initially, remember I told you I bought like 3 years. Wow, I paid 3,000 plus because I have 3,000 worth of power. If the stock price never move, right, every single day, the power becomes lesser and lesser. Once it expires, then no power already. Make sense or not? So far, can you understand? Now, theta, you can see, there's the song by, don't know who lah. It's called Theta T. Okay, but doesn't matter. So you see theta, it shows you every single day, this option, how much is losing. Every day, is losing 0.2, 20 cents. 20 cents times 100 is how much? $20. So every day, without doing anything, if the price doesn't move, it lose $20, $20, $20. So although you pay, let's say $400 for this option, you see, you buy options at $400, every $400, yeah, $400. Every day you lose $20. So tomorrow you come and check. Now it's 420, right? You buy at 420, the value tomorrow becomes 400. Then the next day becomes 380. Then becomes 360. It will every day decay. It's called decay. Understand so far? Can So far can understand? So theta is very important. You must go for very, very low theta, as low as possible. When you go for low theta, means that every day the options lose value slower. But every day definitely lose value one. Just like every day we become older. But I know lah, for guys like me, the older we grow, the more valuable we become, like old wine. But okay, but for options, it's not like that. Options every day becomes lesser and lesser time, the value drop. Okay, ladies also, the every single day your value grow. Okay, I don't want to offend anybody here. Okay, so understand or not? So understand that every day the value drop. If okay, how many type T? Theta shows you how much it drop. Now, if this one is a 6 days option, right? 6 days option, every day you lose $20. I go to 55 days option. You buy further options. Now every day you only lose $10. Okay, you only lose $10 and 7 cents. Okay, this one, okay, I should put a 400 call. Okay, you only lose $10. If I go further out, I go further out to 300 days. 300 days. Okay, every day you will lose. Now you lose $7, lose lesser already. So the further out I go, the lesser value I lose every day. Make sense or not? Now this one only lose $5. Understand? That's why I like to go very far out. Because you're playing against time. This is the downside of option. Option was so beautiful. It goes out, make money, goes down, lose a bit. But the thing is, every day the value drops. So you are fighting against time value. Cannot. So therefore, I like to go long term. Okay, the shortest if you want to buy option, minimally go for 300 days and above. If you can go further out. Got it? So far, can you understand? That's why I go for long term. Is this clearer? Useful or not? Okay, clearer type Y. Okay, so that's why we go for long term. Okay, so let's go back to the risk graph. So settled, go for long term. I don't have time to go through implied volatility. But if you're in OMI or if let's say you study options, please go and study. This one also very important. But you can see options. If you buy options, it gives you the potential upside, but it limits your downside. Limited risk, unlimited return. You can see maximum risk already here, unlimited profit. The chance of profit not accurate. Okay, don't need to care about this one when you talk about long-term options. If you talk about short-term options, the chance of profit a lot easier to understand. Can if the price is now 407, I'll go for 400 a little bit lesser. Okay, can, but actually can be even more advanced one to find the best options because different options. Okay, this one really advanced already. Today I'm talking about basics. Okay, this one really advanced because you can go and calculate one. Okay, let's say you go for very long term option. Now I'm paying about 3,000. You see, I pay about 3,009 to lock in the price at 400. Right? But the price now is 407. So if I can buy the stocks at 400, you see, you think carefully. If I can buy the stocks at 400 and I can sell at 407, my value, this intrinsic value, these options, the real power got $7.30. Make sense or not? There's a $7.30 for these 400 options. When I say real power means that now you go and click exercise, which we never exercise. But if we click, in theory, if we click exercise, we can buy at 400, we can sell at 407. So there's a $7.30 worth of real value, or what they call intrinsic value. Now, you look at this, 390, right? From 409, from 400 to 390, if I lock in the price even lower, if I lock it at 390, right, my value actually increased by $10. Make sense? Are you all still with me? If with me, how many type $10? Sometimes I worry either my internet go off or you're gone off already. Okay, understand? So you see, actually there's a $10 worth more value here, right? But I'm only paying how much more? Here I pay $39, here I pay $45. So I'm only paying about $5 to $6 more. I pay $5 more for another $10 worth of value. Why not? So there's different ways to calculate one. Okay, so there's an optimal way, but this one a bit too cheap already. But again, the same time is there's a downside is you're committing more. If when you commit actually more capital, okay, your ROI is lesser. When you commit less capital, like $10, your ROI is higher. So this one for people who, if you are very new, don't worry about this. It affects maybe 1 or 2 or 3% more, but it's not a game changer. Actually, it is. Okay, can okay, can So I do hope that this one makes you guys interested. But I want to share with you something. A lot of people never even learn about all this, and they are down there pressing buy sell options. They never learn all this. So if you learn all this, I tell you, you are playing against a lot of people who don't know what's happening. So unfortunately, like I mentioned, sometimes people will lose money in the stock market. These people who don't know what's happening will lose. Who are they losing it to? They are losing it to people who are willing to take the time to understand, to study, to measure, to really calculate. And before you enter, you study everything really, go inside there, your probability very, very high. Okay, So I just want to encourage you guys to put time to go and study all this, because the profit in the options market is crazy. It's crazy, okay? It's crazy in the sense that it is worth it. Okay, So, okay, this is buying options. Buying options. That's why I like to buy long-term options. Now, let me show this. Let me show this. Now, the thing is this. Actually, Kim, let's go back to Kim. Kim sell options. He sell me options, right? When he sell me options, right, his graph looks a bit different from mine. Actually, very different from mine. Okay, so let me show you this. Let's compare side by side. It'll be quite fun. Okay, but Kim, his is not long call. Okay, his is what? His is short call. And then you can see short call, they call it naked. Okay, but he's not naked. Okay, don't worry so much. Okay, so these are all, like I mentioned, are sophisticated terms that people like to use to confuse other people. Okay, so you can see when he short call, he collect the money first. He net credit. Credit means he collect the money. So for him, Kim, I'm talking about Kim. Now, do we do short call? Sometimes we do. Sometimes we do when we have the shares or we know what we are doing. Now, you can see here they put the chance of profit is 71%. But he won't do. Okay, he's very silly if you do long term. You can do short term call. Okay, like 7 days. You can do short-term call like 7 days, means next week. You collect about $100. Okay, you collect about $100, but you must have the shares. And then your profit is 127, then you have a 75% chance of winning. Okay, you can even make it 91% chance of winning, but you collect lesser money. So there's very high probability trade. You collect a bit of money, just every week, a bit, but high chance of winning. Okay, and then you make sure that if you lose, that 91% means that there's a still chance of losing. That 9% when you lose, you make sure you limit the loss. This is how you make money. Okay, there's a lot of seasoned investors who like to just sell options. So keen, usually if you sell options, you must be quite a seasoned investor. Usually new options investor, we buy option only. I mean, we as in you. Okay, for me, I also sell a lot of options. Got it? But again, it is just to explain why people sell options: for premium, to collect money, for income. Okay, people buy options for the upside or the downside. Can This is sell call. This is sell call. Short call is sell call. Yeah. Can When I say sell option, I mention sell call. Yeah, sell option, sell call. So short call, short is sell. Financial people like that one. We like to use like 10 different terms to say the same thing and then to make you confused. Okay, you all get used to it a little bit more. Got it? So you can see the thing about selling options is you collect income. Got it? Collect income, and then okay. So what he's hoping is the price don't go up . So he's hoping that the price goes down. The price goes down. I'm hoping that the price goes up. So my risk graph looks like this, because I buy a long-term call. I want the price to go up. I'm assessing. I think the price should go up. For him, he's assessing that the price won't go up. The price will stay still or just move here. Okay, can you see this cute little hum here? Can you see the hum? Yeah, for options, when you sell, you let it expire, or you can close on the last day. When we sell options, we let it expire. When we buy options, always close before it expire. Yes, correct. See, I told you, Sean, that's one. If you buy, never let it expire. Thanks, Kelly. Okay, so can you see this cute little hum here? This cute little hum is what they call normal distribution. And based on the general movement of BRK, okay, there's this thing called implied volatility and also standard deviation, mathematics term. So last time you suddenly regret, right? Wow, why I never listened to my math teacher. Doesn't matter. Here I teach you. Okay, so you can see this is a standard distribution. Okay, typically about one standard deviation and 2 standard deviation away. So they are saying that basically BRK in the next 7 days, okay, there's a 50% chance, a very high chance it will remain at the, okay, it will be at this price. This price is what? 407. Okay, there is a 85%. Can you see 85% chance it will be below 413? Okay, so this is the strike price, The strike price is 415, right? 415. There is a 92% chance it will be below 415. Okay, can you see 92%? Okay, how do they measure 92%? They base on the share price movement for the past 30 to 52 weeks, right? Okay, about 1 year. See how much BRK moved within 7 days, and then they measure this thing. So typically BRK 7 days won't have a chance where they move like, wow, boom, go so many percent one. It won't like, okay, so you can see, can you all see plus 0%, plus 1%, plus 2%? So usually within 7 days, BRK won't move 3%. You see 3%? So 3%, the chance is like, for it to move 3%, right? The chance is only 1.8% chance. Am I making sense to you all? Okay, so you say for BRK within 7 days, move 5%. 5. So from now, the price is 407, jump to, let's say 430, right? They say it's impossible. Never in history before in 7 days it moved so much. It's based on historical data. So can you understand this is the chance of profit in the short term? Movement is agar-agar. It's more like Kinoko jelly lah. Okay. Okay. No, the movement is actually based on statistics. It's based on pure statistics, probability. Okay. Okay. So sorry, I let you joke. Okay, got it. Okay, guys. Now so you all know what is buy call. You all know what's sell call already. Can so now I flip it over. Flip it over. So is it okay? I flip over. So we go Tesla already. I speed up a little bit more. I hope I'm not. I'm really very scared later I confuse you all more than I help you all. Okay. Yeah, I'll make this available. I'll make this video available, okay? So you all can go back and slowly watch. I don't want you all to be scared. So initially I want to okay. Okay, can okay, for those interested in SIC later I tell you all more about it. But I want you all to watch finish first. If you all cannot even stand me talking about all this, then don't go for SIC. You'll get even more confused. Okay, I make this available for all of you all. So you all don't be too worried. Okay, can So Now, if I sell shares, if I short shares, means that I borrow to sell first, okay? If I borrow to sell first, what happens is I'm hoping that the share price goes down. Okay, if the share price, now the share price of Tesla is 179. So now if I sell shares, now 179, if the share price goes down, I make more money. Can you see my profit increase? Hopefully Tesla close down, becomes zero. Okay, range. Tesla go all the way to zero, $0. If Tesla goes all the way to $0, I can buy at zero. Is it zero already? Oh, not enough space for me to go zero. Okay, if it goes all the way to $0, Tesla. Wait, is this something wrong? Okay, yeah. The maximum profit I make is 17,900. Why? Because I can buy at zero, and then I already sell the shares. I already collect this money already. This money is inside my account. So I'm hoping to take a bit of the money to buy back the shares and pay back the brokerage. But if the share price goes up, then jialat, lose money. Okay, why? If the share price goes up, let's say from 179, it goes up to 200. I have to spend $20,000 to buy back Tesla and pay back to the brokerage. The brokerage already give me 17,000, about 18,000. So if it goes up to $200, okay, I will lose about $2,000. Can you see? I lose $2,000. Why? Because I paid 20,000, but I only collected 18,000. I mean 17,900 plus. Okay, got it? So this is shorting of shares. So instead of shorting shares, if you think that the share price goes down, instead of shorting shares, what do y'all do? Come on, make a guess. There's no break, sorry, because I want to finish by 12. You want to go and take a break, do some squats. Okay, can Okay, buy what? Buy what? No, you want to buy, short the shares? No lah, Binos, you're inside my Telegram, right? Then you just go Telegram and see now. Okay, can So okay, actually, if you want to short shares, instead of selling Tesla, you buy a put. Okay, buy put means buy put. Let me show you this. Buy put, it means that you lock in the price. Okay, so now I go back to the basics again. So remember Michael Burry? Okay, so when you buy a put, when you buy options, you are locking in the price. You buy, you put money. When you put money, you are the boss. I'm the boss, I lock in the price. So when you buy a put, you lock in the price to sell shares. So what does it mean? Okay, so now turn over. So Tesla now, let's say going down. What happens is, let's say I lock in the price. Let's say I lock in the price here. Let's say I buy a 240 put. A 240 put means I lock in the price. Okay, just to explain. Buy 240 put, lock in price to sell. So I have the rights to sell. Rights to sell at 240. But why I want to sell at 240? I don't even have shares. Now, because it's when the price goes down to 160, I can go to the market. In theory, I can go to the market and buy the stocks at 160. Okay, now market price 160, I go and buy, and then I go and sell at 240 to Kimi. Okay, Kimi is always the person who go against me now. Okay, example. So Kimi, he sell put. I think OMI, you all got learn sell put, right? Okay, sell 240 put. When you sell a 240 put, what do? You are promised. So when he sell a put, he promised to sell, to promise to buy shares. He promised to buy shares. If he promised to buy my shares, means that I have the rights to sell the shares to him. Cannot? Okay. So same thing. Buy put. When you buy, very good question. When you buy an option, you are always very concerned about this thing called theta. Okay, so theta means that the time value will drop. So you can see whether is it call or whether is it put, right? The theta, I think it's theta, it's pronounced wrongly. Okay. The theta, when you actually compare a short-term one, even for put, look at the theta. Okay. So let's say you sell Berkshire Hathaway. Okay, just give you an example. Let's say I sell a 405. We use 405 as or 400. Make it easier. Is 0.14. So every day is losing value of 0.14. $10.40. 6 days options. If I go to 600 days, I expect it to be lesser. 400, a 400 strike price is becomes 0.013. Can you see? Long term is always better when you buy. When you buy, you are holding on to it. You want to buy at a certain price, then the value goes up, then you actually close it. So you want the value to drop lesser. Okay, Ken? So this is buy put or sell buy put. So you buy put, you're hoping the share price goes down. You pay money to lock in the price. When you sell a put, Kim, when he sell a put, he collects money. He collects premium. Okay, he collect premium . So he's an income guy . Collect premium. That doesn't mean it's bad . Actually, I also collect a lot of premium . Okay, collect premium. Okay, but when you collect money, you take people's money, then you have to do people's job . And his job is to promise to buy shares for me. Okay, Ken? So far can . So let's complete the picture. So my long put, when I actually buy a put, I long put, I pay money. I pay this one. No, this one is usually I go long term one. I pay $3,000 for a 1.6 years put. So when I pay $3,000, the share price goes down, I make money. Make money 3,000, 1,000, 9,000. Okay. When the share price goes up or never move, I lose my premium. Maximum I lost is the premium. So I want to share with you all something. Example, let's say I sell a put. Okay, example, guys, example. So I just, is it okay I share something a little bit more advanced, or you all cannot take it already? If it's nearing expiry, yes, the data will change, will boom, like bullet train. It's basically like you go Sheng Siong, the value will drop when it becomes near expiry. You go Sheng Siong before. So this thing the chocolate next week expire already, suddenly got discount. Why? Because the value drops by the time expire worth nothing already. So people quickly sell it off. Okay, got it? So you buy with longer expiry date, it's better lah. The value drops lesser. But if you buy food with long expiry date, means that there's a lot of preservative, you're harming your body also. That one is another topic, but you'll get what I'm trying to say. Okay, now, so come back to here. So let's say I buy, you see, I buy a long-term put. I buy a long-term put, and then it is for, you see, so if I buy the put, okay, I have to pay 2,550. Okay, you can see the price here. I buy put. Buy, sorry, click on buy order, buy 410 put. This is just an example. I want to show something first. So maximum, how much will I lose? Can you tell me maximum how much will I lose? 25.50 times how much? Yes, okay, 2550. Some of you, the mathematics is there. Some of you already in a place where you need to wake up. Don't worry, can rewatch this. So there's this thing you can put stop loss. Stop loss means, right, okay, now the value of my put is 2550. If it drops by half, I will just go away. Okay, drop by half, 2550 is 12.5, 12.75, is it? Okay, so if let's say the value of the put drop, okay, so instead of losing 2,005, I say maximum I only want to lose 1,000. Maximum I only want to lose 1,275. You can put a stop loss. Okay, so stop loss is very useful, especially for long-term trades. Okay, so this is something additional for those who never see before. So whatever a brokerage, they will have this thing called stop loss on. So what it means is if the value of the, you see, okay, this one is the put, right? If the value drops, means that the share price goes up. And if it goes up to around here, right? By right, you see, by right, it hits all the way here, goes up, while you lose your whole entire premium already. But if you expect the price to go down, but it starts going up, right? Actually lose a bit, you can okay, get out, means that I'm wrong already. You know what I'm saying? So you can put a stop loss. And when you put a stop loss, right, I'm going to very strongly suggest, okay, here you put good to cancel. Good to cancel means, okay, if you put day, means that it's just for today. If today it never drop, the value of the premium never drop, then this order disappear already. Then you must go in and key in every day. When you put good to cancel, it will be there forever until it expires, or until you come inside here, log in, put in your password, and click cancel order. Understand so far? So this one will help you save a bit more premium. Got it? So this is additional things. Okay, guys, you want to take 5 minutes break? Stop loss is yes, market. Stop loss is basically you already put here already. It's not market order. It's stop loss is here, you put in, you set in your price already. It hits here, it triggers, then it goes in. Okay, sometimes you may not get it because there may be gap up or gap down. You may not get the stop loss. But know that if you buy an option, the maximum you lose is your premium. This is something that I love a lot. I don't like to lose money, but I like to know that if I lose, I already cap what I lose. This is what I like. Okay, Ken? So this is options. Profit taker. Okay, profit taker, you can set it also, but basically you say that the premium now I pay is 2,500, right? If double goes to $50, then I will just sell it off, which in options world is not impossible. You all can see go up by 100%, 200%. Okay, but for me, I usually like to let it run. Can you see profit taker? So same thing so if it goes up, make money, goes down, lose money. I click set and forget. Then 1 year later, then I come back and see, wow, actually I make money already. Or wow, actually 2 days ago I lose money already. Can Oh yes. Actually, trading stop loss is very, very good. Okay, but this one another time. Can Okay, guys. I know some of you want a break. Is it okay we take a 5 minutes break? 10:30 we come back. Go and take a bio break. Come back. I want to switch gear already because this is options basic now. This is really basic. I hope that for those who are new, don't be too discouraged if you don't know what I'm talking about. If you want to do live trade with me and things like that, and you want to learn more, I do have Super Investors Club. Later, then I do some promotion. But I want you all to learn all this first. So 5 minutes break. Okay, so now until 5 minutes, I don't really need break lah. I'm a superhuman. You all can ask me questions. 10:30, I will officially switch to the second portion already. Second portion is inverted yield curve. Yield curve. Well, I'm half an hour behind. Okay, but in summary, you all can continue to ask questions. In summary, if you think share price is going up, you can buy options to lock in the price. Buy call to lock in the price. If you think share price is going down, you can sell put. Oh, sorry, sell put. You can buy put. Okay, we talk about buys first. We can buy put, use money to lock in the price to sell, and then we make money. So you can buy call. If it goes up, you can buy put if you think it's going down. Now, this is, okay, for those who are a little bit more advanced, OMI, you all got learn implied volatility, right? Have, right? Implied volatility percentile. It's also for those who need to take a break. Now it's just Q&A, don't worry. So, okay, can I ask you this? If implied volatility percentile is high, do you buy option or sell option? Very good. Steady. Pass. You only buy option when implied volatility percentile is low. Can? Very good, very good. When to close buy position? Okay. So, okay, for close buy position, the buy position, right? This is what I'll do. Okay, so for Berkshire Hathaway, example, for me, for me, now I buy a 600 days one, right? You can see January, March, June. So in a few months' time, you will see a March 2026 option, correct? When I see a March 2026 options, I will close this option, means that I will sell away, then I buy the latest one. Because I'm those kind that the latest iPhone come out, I will go and queue out one. Actually, no, I'm kidding. I don't do that. But the latest options come out, right, which has longer expiry date, I'll go for it. Why? Why do I do that? Because the latest one always have lesser data. So every time a new options chain come out, I will jump to the next one. Okay, why do I do that? For BRK, those kind of stocks, right? Because long term, I keep seeing it goes up. Okay, until I see bearish. Wow, this one a little bit cheap already. Okay, you all got learn technical analysis in OMI? Have, right? Technical analysis, 200 days moving average and stuff like that. Okay, when I see bearish indicator, example here, let me see whether any super bearish one. Oh, okay, here. Okay, example for BRK, right? You see always go up, above 200 days, above 20 days, above 50 days. Then it cuts below 200 days. Wow, this one very bearish already. Then I exit. I exit first, okay, because go down already, Then when it becomes bullish again, so this whole period, you can see losing money one. Because if I go long term pump here, I avoided. Then I enter here again when it goes up again, above 200 days moving average, bearish, bullish again. Then I go up, go, all the way make money until now. Okay. So this is something that use a bit of technical indicators, but later the one that I teach you don't need all this one. Okay, because I don't want it to be too difficult for beginners to get started. Can? For selling weekly options, do you need to look for implied volatility? Okay, handy. If you're talking about strategy X plus, correct? Strategy X plus, right? Very important is your long-term call. Let's say you buy a very long-term BRK. Let me check first. BRK right now, implied volatility percentile, you can see 14 percentile. So can buy or not? If let's say everything aligned, can buy or not? Yes or no? Can buy a long-term call? Do you know? Answer is yes. Yes, because cheap, So I buy a long-term call. Let's say I go and buy a long-term call now. Then after that, right, every week I can sell short-term call. Okay, for SIC, you all know. When we sell short-term call nowadays, we always like to look at data. Delta. Delta will tell us the probability of it going in the money or out of the money. So when we use delta, okay, I don't look at volatility. Because the thing is, I just get as much money as I want. Okay, I just get as much money as I can. Because if I have to wait for volatility, it may be a few months later already. But now I can make another $20, $30, $60, just make this one probably make another 60 something dollars. So if I invest a few $1,000, I every week make $60. 1 month can make about $200 over dollars. Not bad, correct? Okay, so let's see. If I'm going a bit fast, it's because I'm doing mental calculation. How much is this? Long-term call. You can go for a short-term call. Okay, I invest 6,000, and if I buy a long-term call now, it's $6,000. 60 plus 100, $6,000. Okay, and I make $200 divided by 6,000. So every month I can make about 3%, and it's very safe. I know 3% is not a lot every month, but 3% every month multiplied by 12, also 30%. Okay, it's additional 30% of income. Okay, but this one, if you buy the shares, you lend the shares out. But if you buy a long-term call, you can sell a weekly call. For OMI, you all will understand this. And this is what we always do in Super Investor. I like to actually keep selling a lot of calls. Okay. Plus going in depth into a little bit more advanced stuff. Okay, can? For Strategy X Plus, do we need to have the capital to buy the short-term call? We don't need to buy the short-term call. We have to sell the short-term call. So Tipan, is it? Tipan? For Strategy X Plus, you need to have money to buy the long-term call. So for example, Berkshire Hathaway, you can buy a $6,000. You can buy a 400 strike price. Okay, call. Now, if let's say you cannot afford, let's say your capital, not cannot afford. I know you're very rich, but let's say really your portfolio size is a bit smaller, you can go for lesser days, lesser days. Okay, it will affect based on theta. Okay, lesser days. You can go for all of the money or lesser days. Okay, but I rather you go for lesser days if you want to sell short-term call. This one will cost you 4,000. So you save 2,000, but every week you can still make another 200. No, every month you can still make another 200. So here you can keep selling call, make some money. Can not? Buy long-term call, sell two short-term call. No. You buy one long-term, you sell one long-term. 1:1. Okay, can Okay, can For short-term call in the money, can we continue roll? Yes, you can keep roll. Actually, if a stock is you're very bullish long-term, you can keep rolling and rolling one. Okay, ultimately someday you roll to the point that you won't lose money on. Got it. You are lost. Okay, hey. Okay. So this one is a bit advanced already. Okay, can we go to the next portion? Okay, the next portion I share with you. I wish to be able to tell you it will be a lot easier, but I also don't know. Okay. So I share with you, I do my best to share with you. If you all don't know, you all ask. But let me share with you all some things first. Okay. Wait. I hope that I am providing value than making you all confused. That's the okay lah. But okay, so I'm going to talk to you all about this thing called inverted yield curve. Okay. I try my best to explain in a very, very layman term. But do you all put money in the bank? You all put money in the bank or not? If you all put money in the bank, tell me how much interest you all get. I won't be covering rolling. Oh, this one I do simple one. Okay. If you all put money in the bank, can you all tell me how got so sad or not? 3.2. Okay, this one is a high net worth one. You put fixed deposit. I'm not talking about the current thing. Okay, so let me explain to you. Typically, the bank interest rate, right? The longer you lock in, the more interest they give you. So this is the fixed D lah. I go and check the DBS one today. So if you put the money in the bank, for let's say about 1 year, this one I also don't know how they calculate. Okay, but I can see if you only put inside the bank for 7 days, they give you 2%. You put inside 60 days, 2 months, they give you 5%. The longer you lock in, the higher interest they give you. If you put 10 years, they give you even more interest. Make sense or not? Make sense or not? This one is usual. So let me explain to you, right? Actually, this is a very common thing. Reason being, right? They lock in, the longer they lock in the money, the more interest they give you. Okay, this is very normal, So now let me share with you all this thing, right? In US, or actually in the world, right, they have this thing called yield curve. Now, what's the yield curve, right? And how they do it, is very simple. They will take the long term, interest rate, example 10 years. The 10 years interest rate is 4.46%. Okay, then they will go and compare to the short term, 2 years. By right, if let's say 10 years is 4.46, 2 years should be shorter, right? It should be lesser, right? But now 2 years is more. 2 years is more. Now, what does this shows? This shows that the confidence of the investors, right, is being shaken. Now, what does it mean when I say it's being shaken, right? It's being shaken means, right, okay, they don't have a lot of long-term okay, in short, right, they feel that the economy, right, actually is going to become very, very unstable. Okay, become unstable, they rather don't put the money in the bank for so long. So what they say is, okay sorry, the other way around. They rather lock in the interest rate for very, very long, and they don't mind lesser interest. They say, I want to put the money there. I want to get the interest very, very long. It's okay you give me lesser interest, it's also okay So what happens is when they want more risk-free rate, because all these bonds is risk-free one. Got it? It's risk-free. Government pay you So assume that the government is confirm guarantee I don't know how many of you have confidence in your government. I have confidence in my government. Okay, the way I say no confidence, but I have. Okay. So for US government, same thing. So they say that, okay, I'm going to put the money there. You give me lesser interest, is okay. Because short term, I don't know what's going to happen. So in the end, the short term rates becomes higher than the long term rates. Got it? Can? Understand? So when short-term interest rate is higher than long-term interest rate, is an indication that the investors in the market is being very scared. Their confidence is dropping. So let me show you this. Let me show you this. Okay, I got this particular website. Okay. So this one, what they do is, this is what they call the yield curve. Yield curve is they take 10 years minus 2 years. So the difference is the yield curve. So right now, the yield curve is in negative. Negative is what they call, or is okay. Later we show yield curve is inverted. Okay, because by right, the yield curve is supposed to be like that. Understand ma? So 2 years they give 1%, 5 years they give 2 point something percent, 10 years they give 4%, then 20 years they give 4%. So by right is like this called this is the yield curve. Okay, but right now you realize that the curve becomes a little bit different. What do I mean by different? Different now is actually 2 years. 2 years they give higher. They give how much? 2 years they give, okay, 3 months they give 5%. 2 years they give 4.9%. Then 30 years they give lesser. So in fact, we go back to here. The shorter it is, they give higher, 5%. Okay. Then 2 years they give how much? 4%, right? Then after that, 30 years, 10 years they give lesser, and then 30 years they give lesser. Okay. So the yield curve become inverted. Okay, inverted. Okay, so it becomes like a something on the Wall Street, they will say like, hey, when it's inverted yield curve, right, it's very dangerous. Now, so how they measure, right? They also measure negative yield curve. Okay. So there's a few terminologies they call yield curve, but they will compare these two things. Let me show you. This economics. For those who studied economics before, I'm very sure you've forgotten about this. So did I. Okay, so don't worry. You can see this is 10 years treasury, 10 years treasury minus 2 years. So just now we got see, right? The 10 years minus 2 years, by right, is supposed to be a positive number. So by right, maybe 10 years is 5%. If 10 years is 5% and 2 years is 4.9%, then the number will be 0.5. But now it's negative because 10 years is 4.46 and 2 years is 4.95. So you can see right now, this is now. Today is in the negative zone. It's in negative percent. Can you see that? Can see, right? So far, can catch or not? Okay, later I tell you the impact is coming already. Okay, can. So now it's in the negative zone. Now, this is the scary part. Because this negative zone, right, will make people feel very negative. Then we will start to be unhappy with each other. Okay, but the more important thing is this. Let me go back in time and show this. It has been so far 100%. When you go and read the papers, right? Okay, papers as in all this research, right? 100% every time it goes negative means that the long-term interest rate is lesser than short-term interest rate, which cannot be. Long-term should be more one. Okay, every time it's negative. Let me show you this. Example here is negative. There's a point that's negative. Okay, I couldn't zoom in. Wait, check and zoom in. Can you see it went negative? Okay, every time it goes negative, right, it will feel a period later, right, when it starts to go up, there will be a recession. So this gray color portion is the recession. Do you all know what happened? Okay, in 2020, do you know what happened? Anybody remembers what happened in 2020? Or you're too young? COVID, you remember? So okay, how did they predict COVID? We also don't know one. So every time there's an inverted yield, okay, or negative yield, followed by a trigger event, there will be a recession and the stock market will go down a lot. This is not stock market. This is the difference between the long-term 10 years interest rate and the short-term 2 years interest rate. So when the difference is very huge, you can see 10 years one, this one, stock market, they a lot more confident. Okay. So now let me show you this. Let me go back into history and show you all the negative times. You all will see. Very, very interesting one. All the way back to 1980 something, which I haven't born yet. Actually, I born already. Okay, never mind. So you can see, maybe I go a bit nearer. Oops. All the way. Can you see that every time negative? Then after negative, it goes up, a trigger event. Anybody remembers or not? 1990. You all probably won't remember because I also don't. But 1990, this period, right, there's a very, very big crash. Okay, so I tell you how to hedge up. Okay, so you can see this one, 2000, what happened? Dot-com bubble. Okay, negative, goes negative, trigger event, dot-com bubble. This one, global financial crisis. Negative, GFC, global financial crisis. So, oops. Okay, so it has been 100% predicted. No, so far don't have this one also negative, and then after that, COVID. So right now, can you see? And then what they mention is this. This is what they say. The longer period that it is in a negative zone, the bigger the recession. Can you see? Negative zone, how many days? It affects the width of the recession. So this is where we are right here. By the way, this economics. Economics. Economics means that actually I study economics. So I shouldn't say any bad thing about economics, but there's no such thing as 100%. But so far, the negative yield curve, the negative okay, what you call that this basically portion, right? The inverted yield curve, right, has been 100% predictor. So when should we be concerned? KFC, yeah. So what happens is, you see this negative yield curve, we wait for it to be positive, then we become scared. Okay, understand? Negative is still negative. Every time it's after it become positive, then it crash on. Can you see not? So now no need to scare. Now we can still happily go and long the market. But once it becomes negative, then we become scared. Oh, you got it? So when it becomes positive and trigger event like war, okay, like TikTok get banned in US, all this, then we get scared. Got it? Okay, Jimmy, why? This is based on historical data. But historical data, right, tells us how the market responds. And by the way, this is not just market already. This is economy already. It's not just stock market. It's like the whole economy just crashed. Okay, 2008, all this. And all this, right, typically, okay, now people are saying that they are not so positive. This is what I realized. Okay. But it is that there's a lot of conflicting data point. Okay. And it seems like people are becoming more and more confident. Initially very negative, but it's becoming less and less negative. Okay, later we look at this thing called the VIX. You realize that they call it the fear index. I don't know whether you all hear the fear index. So why has it got to go so deep negative? I also don't know why. Okay, I also don't know why. But this is a sentiment of the market. Because all the interest rate, right, is actually based on demand and supply one. Okay, so it's based on demand and supply. So it's actually based on how much people actually demand for the interest rate and things like that. So there's market forces. Market forces, right, means that it is not government, the guy sitting down there use computer and say, okay, today the interest rate will be how. They also based on the fact like how they assess the whole entire market, and the market responds based on like the inflation rate and things like that. So it's all a mix of economics indicator. Now, without going too in depth, because there's too many things, that's why in economics there's this thing called ceteris paribus. Okay, which is something I learned in my JC. It means that all else equal, if let's say everything we take into consideration, very hard to measure already. What we need to take note of is now the market likely will still go up, but if let's say it becomes positive, we need to take note that a crash may be coming. Can No, market the index is all time high. Haven't. So it will definitely okay. So as this inverted year go down, do you remember year 2000? It's the .com burst. Do you remember not? .com burst. When the .com burst, the market is all time high, then it burst, boom, goes down. Remember? So okay, when actually, right, so there's actually two groups of investors. One group of investor is a stock investor, go in there and then chong one. Another group of investors, right, is all the bond investor, fixed income, and then there's also the in between, the institution that switch between stocks and interest rate, okay, and bonds. So all this actually affects the interest rate. Got it? Can Okay, remember? Okay, so okay, just this one you don't need to go and memorize. You just need to continue to stay in my Telegram, and then the Telegram then I'll tell you, hey guys, inverted already. I mean now it become positive already. Got to take note Then we got to be a lot more careful. When will it crash? We also don't know one. Okay. So this is the Telegram group. I will never DM you or send you any links in the comment. If I send you links here and the main post, okay, can So just a bit of a reminder. So this is the yield curve. Now with that in mind, right? Okay, let me explain to you why I share with you this is because we need to take note as investors, there may be a possibility. So possibility, right, is basically, we also will know one, but if the possibility of crash is coming higher, we got to be a lot more careful, and then our stop loss, everything must be stricter. Make sense? We don't need to suddenly drop, and then whatever we make in the 3-4 years, all gone. Maybe some of you experienced before. Bull market, all make money, then suddenly one time, boom, all gone. Anybody experienced before? If you experienced before, I want you to type 10%. 10% means that I want you to know that you have grown by 10%, 20%, and next time your stop loss, make sure you lose 10% maximum. Okay, Ken? So now the next thing is this. Now I want to go to the main dish already. The main dish is this thing. Okay. I want to go to this thing called VIX. Now, VIX, right? Initially, I was thinking, okay, how should we do in a way to make sure that we don't lose money if stock market crash? So this is my thought process. I'll just share with you. I'm also constantly thinking and learning. I don't have a fixed system that works 100% of the time and then it will always make money on. Okay, so let me explain to you. As the stock market goes up, higher and higher, right? Okay, we are now very happy. Portfolio goes up by 30-40%. Every week make money. Okay, this is what's happening right now. Now, there's this particular concept called pair trading. Have you heard of pair trading? Okay, pair trading, right? Or you can think of it as hedging. So two non-directional, okay, relatively, basically is similar kind of if one goes up, the other, okay. No, this is actually should do reverse pair trading. Okay, a long position with a short position in two stocks with high correlation means that one goes up, one goes down. So I realized something about this. So now stock market is going up, then the VIX is going down. Okay, what is VIX? VIX is actually, later I got a video to show you. So I don't need to explain it wrongly. I got 2 minutes video to actually explain. Can you see? As stock market goes up, 3 months. Oops. When stock market goes up, right, the VIX is going down. VIX is actually the volatility index. Now, volatility, right, is how uncertain people are. So I don't know whether you all see this fear and greed index before. This one, I think by fear and greed index. Okay, by CNN. Oh, now they put neutral. Okay, doesn't matter. So typically, they usually use the VIX to they use a few things but typically also mainly VIX. Okay, VIX and 50 days moving average. Okay, so now let me explain to you this VIX index, right? I'm going to actually play a video to explain a lot easier, because I'm going into the 3 high probability trading strategy already. So all these don't need fundamentals. You don't need to know what is the income statement, the balance sheet of this. Okay, you don't need to know all this. You don't even need to know technical indicators. Okay, so I'm going to share with you all some very high probability trade. And let me first of all, okay, share sound. Let me show you this video first so that you all understand what is VIX. Okay, so this is VIX, and VIX is actually a product created by the CBOE. Okay, you all tell me whether you all can hear the sound. You can hear your type yes. Type Y.
One of the most recognized measurements of expected equity volatility is the VIX index. The SIBO Volatility Index, as it's officially called, is widely reported by financial media as the benchmark of volatility. You'll also hear financial news outlets refer to it as the fear gauge, but for our purposes, we'll refer to it as the VIX Index. So, what is the VIX Index? Well, as its name implies, it's an index. As a measurement tool, it is not a tradable product. The VIX Index indicates the degree or expected level of uncertainty in the marketplace. Specifically, the VIX Index measures 30-day expected volatility of the S&P 500 index by using SIBO-listed options on the S&P 500 index as inputs. You may know these as SPX options. In math lingo, the VIX Index is expressed in percentage terms as an annualized one standard deviation move of returns on the S&P 500 index. Let's unpack that. The VIX Index calculation uses SPX option prices. The prices investors are willing to pay for options typically reflect how much the underlying asset, in this case the S&P 500, is expected to move over a given time frame. The key word here is expected, which means the VIX Index is a forward-looking indicator of market volatility. Between 1990 and 2020, the closing range on the VIX Index has been between 9.14 and 82.69. Higher VIX Index values suggest more expected uncertainty being priced into the marketplace, while lower values indicate less expected uncertainty. Typically, the VIX Index has an inverse relationship to the S&P 500 index. What does that mean? In most cases, when the S&P 500 index goes up, the VIX Index goes down, and vice versa, but not always. Let's take a look at how the VIX Index is used. It is most widely used as a gauge or indicator about the future levels of the market. It's important to remember the VIX Index itself is not directly tradable. For more sophisticated investors seeking expected volatility exposure, SIBO lists tradable VIX futures and options. Let's summarize what we've learned. The VIX Index is calculated using S&P 500 index option prices. The VIX Index is a forward-looking indicator of expected stock market uncertainty. A higher VIX Index level suggests greater collective uncertainty in the market, and a lower VIX Index level suggests more certainty. The VIX Index itself is not tradable. SIBO lists VIX options and futures for investors seeking expected volatility exposure.
Okay, so if you don't really understand, right, it's also okay, but the key thing is this. Let me summarize for you. Okay, so this is the key thing. So it has an inverse relationship to S&P 500. You all got take note of that part. If okay, how many type 1? You know? So this is talking about S&P 500 only. VIX is only measuring S&P 500. So if the higher the VIX, okay, the higher the VIX, it shows that there's more uncertainty. But typically, there's during the downside. When S&P 500 drops, the VIX goes up. So what we can do is, actually, that's what I'm also doing right now. For super investors, you also see, I buy VIX. Because why? S&P is going up, up, and up. So S&P is going very high already. Now, no matter how S&P go high, we never see a straight line one. It will go high, it will retrace. Make sense or not? Cannot be like, wow, straight line, boom. Okay, I mean, there's possible extended period of going high now. But even then, there's periods of it going down, correction, there's correction. So if it corrects, right, then the VIX will likely go up. So when S&P goes down, okay, some of my portfolio will reflect, oh, my profit drops, okay? But I mean, those are paper profit, right? Those are paper profit ma. So example, I'm holding on to quite a number of shares, which you all saw, like even Amazon, all this. When VIX, I mean, when it goes down, it will cause S&P to go down. But my VIX, you can see my VIX, all these call will go up. All these call will go up. Now it's actually going down because the value goes down. So you can see my portfolio is mixed with these two things. It becomes like a hedging, but I call it pair trading. Pair trading, and because I prefer to long things now. Okay, I prefer long things, and that's why I actually use VIX. Okay, understand also. Actually, I buy a long-term call for VIX. So when VIX goes up, I make money. But usually when VIX goes up is when S&P goes down. So certain portion of my portfolio lose money, but I think it will be short-term only lah. Okay, I don't think it will be long-term go all the way down. So short-term goes down, I actually lose. I look like I lose money, paper loss, but the VIX, that's where I realize again. When it goes up, I realize again, make money, and then I collect a certain income. Because stock market doesn't go straight on. Does it make sense or not? So far, can you understand? You can understand how we type PT, pair trading. So we take two assets and then we pair them together. Now, so here comes the interesting portion. So as I study more into VIX, right, I realize something that VIX doesn't have very, very long-term options also. So it makes me a bit concerned because data is actually eroding. So I went to study more about VIX, and I realized that VIX, right, has VIX ETF and ETN. Okay, this is what I want to introduce to you guys today. And after I share with you guys, right, I hope that you all may consider, again, I'm not asking you to buy or sell anything, you all can consider putting some of this into your portfolio. And let me explain to you why, okay? So now, for me, I mean, probably I share with some of you guys, I'm going to actually open up a hedge fund, and I want to make sure that the investors' money, right, is very well protected, at the same time can grow very fast. How do we do that? We can use VIX ETF and ETN. Now, you can see, right, these are the products, and these are all very short-term products. Later, I explain to you all something. It's very interesting. As I studied into this, I saw plenty of opportunities which even beginners can use, but make sure position size. Don't throw all your money in. There's no guarantee one, okay? So you can see there's this thing called gearing. Okay, we all look at the gearing. Gearing 1 means that they match 1:1. So they create ETF, ETN, they use VIX futures and options, right, to create a product that's like VIX. So as VIX go up and down, okay, your ETF and ETN also goes up and down. But can you see that it's very beautiful one? Because VIX, let me explain to you something. VIX, right, as just now the video mentioned, historically, right, it is between 100 and 0 It won't go to negative because it's an index It's an index. Can you see, like, let me go to all time Wow, okay, looks a bit scary like that. But let me scroll it down. Can you see? It looks like some of your heartbeat when you all do burpees, right? Your heart rate pop, or then here you do burpees, but you almost skip a step, and then the Korean drama, don't know the zombie come out. Okay, that you see, looks like your heartbeat. But can you see that it doesn't go below a certain portion one? So it's very safe. If you actually buy VIX here, but it's very, very long term, I want to go for very long term because I know that eventually it will go up one. Can you see how safe this instrument is? Can you see or not? Or you all don't know what I'm talking about? Yes or no? Can you see, like, so if you buy something that you know will never go to 0, you won't lose a lot of money So now it's 11 point something, you buy then you just wait until it go hit 20, double can already, then you make money already. Sometimes very simple one. So don't go for very complicated stuff. Actually, this one is a bit complicated already, but you know this kind very, very safe instrument. It may be prolonged period in time. So therefore, I keep trying to find an instrument, okay, a ETF that matches it and have very long options. That's where I found this thing called VXX. Okay, VXX. which is a ETN. It's a ETN. Okay, later there's others. Okay, so there's actually 2 times gearing, there's a -1 and stuff like that. Okay, minus is reverse, so the opposite of VIX. But opposite of VIX, then it becomes like S&P already, right? Because VIX is opposite of S&P. Now, so let me explain to you, right? All these ETF and ETN, they are created to match the index. Index is don't have real stocks inside one. It's just a measurement. It's just a number. So there's no stocks inside one. It's just measure, okay, this is the expected volatility of S&P 500, and then it becomes a number. Understand? Also, if there's no stocks inside, you cannot go to 0. But you also cannot go above 100. So it's always in the range. So I want to go for ETF. I said that, hey, if my ETF always go ranging, if I know it will go ranging, I know how to make a lot of money. It's predictable. Got it? So let me explain to you how ETF works. So you can see this is S&P 500. Okay. Let me show you another index. This is called, okay, this is S&P. Just now, the one that I show you is S&P 500 ETF. So it's an actual company, an actual stocks, a fund that takes money and buy the real shares. They really got shares inside one. Now, let me show you S&P 500. This is an index. Index means, right, you cannot buy the index one. So can you see that SPX is very similar to SPY. SPX is the index. SPY is the ETF. You cannot buy SPX. You can buy SPY. So far, can you understand? Let me show you. I compare with you. You all tell me whether similar or not. So for this is called trading view, which if you are very new to it, you can use and play around with it. You can put indicators and stuff like that. So you can see I'm going to add and compare. I'm going to compare SPX to SPY. I click here. See, you can almost see that it is similar. Let me go 1 year. Okay, if it goes 1 year, can you see that basically S&P 500 SPX has gone up by 23.19%. If you buy SPY, it has gone up by 23.69%. It is very, very similar. Very, very close. Very, very near. Can see that? They are twins. They are identical twins. I have seen twins that are not identical one. Okay. So you can see. Now, let me show something. Then I saw something very, very interesting. VXX. VXX option, right, is basically, it is a exchange traded note that tracks VIX. Okay, which is the index. Okay. They track the VIX. And then, okay, so what they do is a portfolio of front 2-month VIX futures, which later I will explain a little bit more. So how they construct it doesn't matter. I don't care how you construct. I use options, use stocks, whatever. As long as you can give me the same effect of VIX, I'm happy. Okay, so this is my thinking. Then I realized I make a mistake. Okay, this is super interesting one. Yes, you can use. That's why I'm totally doing that. Ke Yuan. I'm actually using VIX to hedge against SPY, because now SPY going up very nicely and I'm making money. But when it drops at time, I also want to make money, so I use VIX to hedge. So I buy a long-term VIX call, which actually here, you can see I buy long-term. But their long-term also not very long-term, until 2025 only. That's the maximum they can go. I want to go even longer term, so that theta doesn't kill me. Okay, because theta can affect one. So let me show you something that's very interesting. Okay, I think it's interesting. I don't know about y'all. Maybe y'all think it's boring. Okay, so now, you see, so this is VIX, right? Then I add VXX. So is it supposed to be like twins? Okay, I thought they are twins because it's supposed to track. Y'all see carefully. Just now we saw SPY, so VXX. Y'all see. When I saw it, I got a bit confused. Boom. Can you see that it is twins, but it's a deteriorating twins? So although it looks like the same, right, but it's going downwards one. Can you see that it's going downwards? Yeah, we also, yeah, Korean, correct. We actually make income while we hedge the market. Oh, very interesting, when you say alamak, for me, my saliva dropped. You know or not? You know why my saliva dropped? Then I realized something very interesting. Okay, when I go back in time, this ETN keep dropping on. It's like historically keep drop. Whoa. Do you see opportunity? Okay. It is a very interesting thing. So I go and study more into it. Okay, I was very mind blown. Okay, so this VXX, right? So I go and study. What's the difference? VXX and VIX. VIX is an index. VXX is an ETN. You can actually buy and sell in the stock market. Okay, it's like an ETF, but it's called ETN. Okay, so it can be traded like stocks, but VIX you cannot. You only can use options. So this is interesting. But then the thing is, it actually keeps dropping. So when it keeps dropping, right, I realized something. You know why does it keep dropping? It keeps dropping, right? Because VIX is an index. You look at this, there's zero time decay. Remember just now we talked about data? There's zero time decay. But VXX, the time decay is very, very, very high. Just now, if you remember, I mentioned this thing, okay? How they create the VXX. The tongue twister. This particular instrument, VXX, the VEX, okay? It is a node that is using futures. Futures is like options, but they only buy options, they buy futures to mirror the VIX. They buy options, but they every time buy 2 months worth of options. So they only buy the next 30 days. They only buy 30 days of options. Now, remember when I told you when you buy options or futures and options about the same, when you buy all these, should you buy short term or long term? ST or LT when you buy a time? ST or LT? Okay, you should buy long term. Why? Because the theta is lesser. Your time decay is shorter, your time decay is lesser, so it rots lesser. But this one, I realized how they create the so I went to actually go and study a VXX. Then wow, okay, my saliva really drip. Okay, you can see the time decay is very, very high. It's very high. So that's why a lot of traders prefer to short VXX. It is not a long-term investment, but can it be? Okay, think about it now. So, okay, liquidity, the VXX is also very high. So, you know, it's so funny. When I look at this, this VXX is a ticker, is created by Barclays. If you all watch soccer, you all know that they sponsor a lot of soccer players. And then you can see the market cap is 200 over million. Okay, almost 300 million. And you know what's the funny thing or not? Their annualized returns. So if people buy this, okay, you can buy this as a ETF or ETN. You buy this, right? You know how much money you make every year? You lose 42% CAGR, compounded annual growth rate. Okay, it's compounded annualized growth rate. So imagine I tell you, I find something that can every year help you lose 40%. Then you say, hey, that sounds like me. Every time I buy stock, also lose 40%. Every year my stock price goes down. This is created for you one. Why? Because if you flip it over and you know that this particular ETN is almost guaranteed to lose money. It's almost guaranteed because number one, they are tracking an index that is ranging, but they always lose time value. So guaranteed to lose time value, plus this index will never go up. Will never go up like crazy. So you found an instrument that guaranteed to go down. Why still have buyers, right, Glenn? I also thinking, how to find so many idiots in the world that will give you 200 over million to buy these stocks, right? I go and read, right? They actually bought it for short-term hedging. They don't even know how to use options. There's so many 200. Wow, myself, give me I help you make 10-20% per year. So there's a lot of weird people in the world that don't know what is happening on. But don't laugh at people. We were once upon a time like that, right? Huh? Got it, huh? So, Joel, here is the interesting portion already. Okay, basically, I very quickly explain to you why is it like that. So you all have a clear understanding, because I don't like to invest in something that I don't have clear understanding on. But in short, let me share with you something. So what they do is this. Okay, this is the futures, the VIX futures. Okay, so the VIX futures looks like this one. Okay, so this is a 1 month. Okay, this is only how many days left? Okay, they put how many days left? Okay, so this VIX futures okay, expires in 24 days. Then the second month one expires in 52 days. You see, these are the futures that you can. So the longer the futures, the more value it is. Do you realize that there's a suddenly spike in here? This is the October futures. Now, what happened in October? Anybody knows what happened in October? Why is there a spike in VIX? Meaning to say they already know that in October, confirm guarantee, in October, VIX will go on. What is happening in October? Anybody knows not? Whose birthday? Oktoberfest. Sorry. Presidential election, bros. Okay. Oh my gosh. Yeah, Oktoberfest. People drink then the hey, you make me sorry. Let me laugh finish first. Okay, this is damn funny. Okay. So but anyway, we know already VIX sure go up in October. So as long as my long-term call hits there, I'll make money on. Okay. So okay, sorry. I shouldn't laugh at people. Okay, sorry. Okay, but let me explain to you guys this. So let me go to example. I want to explain very quickly so that we all understand why VIX is losing money. Now, the VIX you can see this is the options. So basically they have expiry date one. So 15 days to expiry. Can you see? This is a January VIX. So the January VIX, the premium is $23. So you must understand, the ETN, just now we saw VXX, so a lot of tongue twister. The ETN, they take the $200 over million. You know what they do? They will go and buy the futures. They buy the VIX futures. So they buy these 15 days futures. Now, but you see, they only, you know that 15 days later, it will become zero. So they cannot stick it to 15 days. So they spend the money. This is literally what they do. You can go and read the papers. The Barclays papers, they got write exactly what they do. They now they got 200 over million, right? They will take 100 over million, buy these 15 days futures. So they will buy it. Then they'll take another 200 days, another half their portfolio to buy this one, the 43 days one. Okay, so they are trying to create a 30 days look-alike VIX. So you can see, let me show you this. Okay, so this is 2nd of January. I'm just giving you an example. Next day, look at this. Whatever they buy, right, the value may go up, may go down. Okay, this one goes down. Why does it go down? Because it's expiring. Now 14 days left. Then 13 days left. So as it goes down, the value drops on, So whatever they buy, the value will drop because VIX doesn't move a lot. Unless VIX spikes, the whole value will go up. You can see below, above there, the thing drop. So when it keeps going down, so every day they need to have a 30 days options. So now there's left with 8 days, right? So out of 8 days, every day they will, after they buy, right, they will sell away this one, then they will buy the more expensive one. So so after they buy, they hold, next day they will sell, and then they buy the next month's one. So by the time, okay, let me show you next day, how many days left? 5 days left. Let me click from 5 more time. 1, 2, 3, 4, 5. Oops. 0 days already. So at 0 days left, there's still value because the futures, right, is in the money. But just now, initially, they buy is $220 over. So they buy, then the value keep dropping. Then now, on this day, right, they will actually put all their money into this already, into the next month's one. So this next month one, okay, this is called V1. This V1, this is called V2. So V1 0 days already. So now 100% of the money is in V2, which is 28 days. Actually, 28 days plus 2 days here. Okay, so V2, when I click next, right, this one, this 17 January, right, will become V1. Click. Okay, sorry. So this becomes V1. Okay, it actually drops and then become V1. So now most of their money is here and some money is here. So they will keep shifting. Every day they will keep shifting from here to here, here to here. But you can see that they are losing money every day and losing a lot of money. So we are investing in something that the value keeps dropping on. Okay, so far can understand. You don't understand, go and read the Barclays paper. You can go and find the Barclays paper. But this kind, okay, so actually in Super Investor, we try to find this kind of predictable investment. But if it's predictable, sometimes you don't have volume or you cannot get in. But I can tell something very funny. Okay, I tell something very awesome. I think it's pretty awesome. Okay, so and by the way, all the value of the VIX is always going down since 2004, keep going down. Okay, sometimes it will spike because the VIX spike. But why this going down is not by market demand and supply. So if suddenly you are Elon Musk, you say, I want to make the price go up. I go in and I buy a lot of VXX. No matter how much VXX you buy, the price cannot go up. It is all a matching of the index because the market makers with trillions of dollars will counter it to make sure that it measures according to VXX at a declining pace. So they actually know that this thing is going down. Very, very, very interesting. I got this kind of instrument in the world. So open up our mind, we realize there's more opportunities. I see how many of y'all left. Okay, still got 500 of y'all left. So the audience retention also decaying because of very cheap. Okay, so I share with y'all something. Y'all see Tesla. So I want to tell you that actually VIX or VXX, right, has very high volatility and volume. Volatility and volume is very important because there's no volatility, right? It's very hard to use options. But if it's high volatility, what should we do? Should we buy options or should we sell options? Think about it. Now, Tesla, right? We look at the implied volatility percentile because, okay, this is today's timing. Current Tesla's implied volatility is 43%. Okay, this is the volatility. So meaning to say, in the next months ahead, right, people expect Tesla's price to shift up by 43% or down by 43%. Okay, roughly around there. Or actually divided by 16. Okay, so there's a certain multiples. So the highest volatility for Tesla for the past 52 weeks is 66%. It will go up by 66, it go down to 34. So Tesla is a very high ranging stock. For a stock to range 34% divided by 16, okay, for it to range so much every single day, right, it's actually crazy. Can you see? Tesla is very high volatility. So is Nvidia. These are the two crazy stocks now. Okay, for S&P 500, right, it just range like that only. Can you see for the next 1 year, probably up by 16%, sometimes up and down by 6%. This is S&P 500. Understand? No? So this is very high volatility. Now, you know VXX, okay, I want to share with you, VXX, the volatility, it ranges here. This is VXX. So I want to share with you, there's a lot of implied volatility, but there's a confirmed prediction that it's going to go down. So if there's very high volatility, what do? We sell options. We sell options on something that will go down. Wow. Actually, it's quite predictable already. How many of you, okay, the more seasoned one, you get what I'm trying to say or not? This is a way to actually high probability trade, okay? So to me, it's very exciting, okay, because, okay, guys, so I'm going to go through the three high probability trades, yeah, okay, 11, just nice. So for those who just join us, this is the one already. Are you guys ready? Okay, screenshot, later watch back the video. You know that I've been talking quite a lot for about 2 hours already. So zoom into this portion. Now, the first portion is this. Strategy 1, because we know that it's going to go down, we can just short VXX. Remember we talked about shorting? Okay, we can just short VXX. Okay, so when we talk about short VXX, right, means that we go VXX. Okay, we see whether can short or not. Should be able to short. Okay, so we can go for the VXX stocks. Then you can see there's a short availability. So people can allow you to short. We can just go there. Okay, this one example. Okay. You know, where's my buy sell? Don't have. Did I press something wrong? Wait, options. Cannot short VXX. Can short. I remember can short VXX. Okay, so we can just short the VXX. So this cannot short, man. Wait. Can short one, right? Okay, never mind. So anyway, this is not my preferred choice because there's a certain amount of interest I have to pay. Okay, should we buy put? Let me ask you, should we buy puts? Is VXX going away after it kaput? This is a good question. Actually, you know they will have what do you call that? Stock split. You know this thing called stock split, right? VXX got reverse stock split, So by the time from 100 goes to $20, goes to $5, right? Suddenly next day you see that it becomes $50. Okay, so they actually do a reverse stock split. Okay, understand? Okay, so I've been tracking it right now. So one thing we can do is buy puts. But however, buy puts, right, got one issue. What's the issue? Why we shouldn't buy puts? Can you tell me? Okay, so I'm going to go back in time and show you this. Okay, yes, IV percentile very high. So let's see if we buy puts, will we still be able to make money? So let me go for this. Trading view, VXX. Okay, let's check. Let's check. Oh, sure or not? You see, VXX go down by 70%. If you short it, you make 70%. And it's almost confirmed go down. When I say confirm, there's no 100% guarantee, by the way. So like I shared with you guys at the start of the video, of this whole session, sometimes I get very, very excited. And I need to study until I feel very convicted, something that I really believe in, then I share with you all, right? After I share with you all, when I enter VXX, I don't throw in my whole entire money. I throw in how much? 5%. Okay, got it? So you all can see, you can potentially make 70% in 1 year. Not bad, beat the market already by a lot. Okay, so you can see, if I short VXX, right, I can actually buy put. So let me show you how I buy put. Okay, this is something that unfortunately some of you, maybe you all cannot do because the issue is this is think or swim. Think or swim, they only allow accredited investors. But they have this very powerful thing called think back, which I can do a lot of back testing. Okay, Ken? So let me show you how I do this. Let me show you this. Okay, but this one we study together. Okay, so you all can rely on me to study together. So you can see I can go back to the point in time of January. I go January 2023. Okay, January 2023, VXX 14.14. Okay, I think they do a reverse again. Let's see whether this will become very confusing. So VXX, the beautiful thing about VXX is you can see they have 745 days options. Okay, which is not bad. Okay. So now I'm going to do is I'm going to buy a long-term call. Long-term put. Okay, because I'm shorting it. So let's see whether we make money. So long-term put I buy, but wow, you see the bid-ask spread is huge. No problem. I just buy at the money. Now 14, I go for let's say 15 or 14. I just put a lesser money, 14. Okay. So this long-term put, I lock in the price at 14. Okay, I can sell VXX at 14. So let's see what happens 1 year later. So 1 year later, we go to 1 year. Okay, 24th or no, January 2024. So 1 year later, okay, you see VXX is 15.52, right? It's because they reverse. They reverse meaning to say, wow, okay, you all will see something very interesting. Can you see now become 25/100? So they times 4 lah. So they reverse the particular this one a bit chim already. I'm so sorry for making you go through this. Okay, so what happens is when they reverse, wow, this one a bit hard to calculate. Okay, I think back may not be able to do it. Okay, let me go back in time. Okay, but technically the push, right, there's this particular risk of reverse. Okay, so in the end, when I go and study the VXX, right, VXX, when we buy put, right, we still make money, but the data, the time actually kills us a lot. Okay, they don't have the data to actually show the reverse. Do they have? This one is 17 January. This one 14 put. Okay, now I buy, then I sell. Okay. It's not accurate. It's not accurate. This one is not accurate. So, but anyway, can you all see? You can do a shorter term one buy put. Okay, shares consolidation, correct? Yeah. It will reverse split, reverse split. Shares consolidation. So understand now. So okay, anyway, this is just to show you don't buy put. Okay, don't buy put. Now the next thing is we can do the short of the VXX. But let me share with you something that I think is even more powerful. We can long SVIX. Okay, can you all please help me type SVIX? Okay, now let me show you what's SVIX. SVIX is a ETF that helps us short the VIX or short the VXX. Is it getting confusing? Short VIX. So they short the VIX futures. So it's opposite from VXX. Okay, opposite. Let me just show you. I hope I'm not doing a tongue twister on you guys. Can you see? It's the opposite. So SVIX, it is a ETF that goes up. So you can just buy this instead. Okay. So instead of having the complication of having to short, okay, it actually goes up. So I show something even more beautiful, guys. Okay, can But I need you all to understand what's VXX first before you realize that because some people think, hey, this VXX is very stupid. It's going down. Myself, I short it and turn it into an ETF. So there's some geniuses who does that. Okay, so we can actually do the. Remember just now we saw the gearing got -1. Remember or not? Okay, so this is a short VIX futures ETF. Okay, Is it too much or is it still okay, guys? If okay, you all help me type. So sometimes I have to check in for a while to see whether you're still there. We can simply just okay, I think weekend they don't allow us to buy. We can just buy it. We can just buy this. So you can see it is a very, very strong uptrend thing because we are shorting something that is going down. Okay, so just now my slides I got put. Okay, I can send you all this also inside the Telegram later. I'll send you guys. There are negative gearing one. So it's inverse. So there are quite a few instruments, but SVIX means short VIX, a bit easier to understand. So if you actually buy this particular short VIX, right, it is going up, because why? The value of the VXX is going down. So it's the opposite of VXX, but it's like shorting VXX. Okay, Ken? So I show you something. If you just invest in this, okay, again, I know that I'm going to be very excited. Let me show this. I compare to S&P 500. So SPX. Let's say you want to be a fund manager like me, which if you want to be, you all should tell me. Then we see whether I can hire you or not. Okay. If you invest in S&P 500, you go up by 26%. You invest in SVIX, you increase by 139%. And it's quite a pretty safe instrument, Can you see? It is like an instrument that helps you beat the market. Okay. So can you see why I told you guys, I personally, if you are my friend, we are sitting at the coffee shop, I say, maybe you put a bit of money into this instrument. How many of you like this? If you all think that this is pretty good, you all please help me type the ticker symbol SVX. I don't get any commissions for you all buying this, but this is a consideration for you to put inside. But however, if you do this, it's no longer hedging S&P 500 already. It's no longer hedging. It's actually going up. S&P go up, this one also go up. Okay, this is consideration. But this is high probability. It's very high probability and the percentage very high. Hey, by the way, take your own responsibility. Don't come and blame me. But for me, I will actually add in a little bit here and there. Okay. So this is for, because I realize it's no point trying to buy a put for this or short this. You buy a put, your data will kill you. You short this, you have to pay interest. Myself is just going to long this. You go and long this SVIX, you get the same kind of profit already. So this is strategy number one. Strategy number one is we short VXX through this ETF. Understand? Okay, we short. So strategy number one is to short VXX by longing SVIX. Cannot. Strategy number 1. I hope this one is worth your time already. Again, don't put all your money inside. We don't know what we don't know. There was a particular point in time, I was actually researching on VXX, right? There's a point in time, Barclays actually stopped this whole thing for a while. Okay, then the whole entire market shaken for a while, but after that, went back to normal. This is the first strategy. Okay, second strategy, we can sell call. Now, what do you mean by sell call? This is for income investors. You like to do income? This is something that may be very useful. Now, what do I mean by sell call? So this is something that let me show you how to do it. Okay, we do some scenario play and backtesting. Then you'll see whether it works for you or not. Now, let me go back to 1st of January, January 2023. Can So one possible example is because this VXX, now we go back to VXX. Okay, can? Ready for income? Ready for income? How many dollar? Like it, no problem. You can share with everybody lah. No problem one. So he sent me this. Yes. So you must do it with position sizing. When it works, it works. When it doesn't work, it doesn't work. Got it? So no problem. Feel free to share all this. There's nothing I'm actually promoting anyway also. I also want to learn all this. So y'all got anything that say, John, your theory got problem? Please tell me. I'm not here to argue with you. I'm here to also make money. So there's no ego in the stock market one. Cool, Okay, so zero ego. Can you help me type zero ego? But I love it. I don't need to price it. Just post it in. Then we discuss. Okay? I don't need to prove to be right. If I'm wrong, then I'm wrong, then I change the direction. Then make money together. Can Okay, stand. But I appreciate it. Thanks a lot. I think you're also very respectful to put it in the private chat. But I love it. We just share with each other. Can? So I want this community to be very open and know that there's no 100% making money one, but there's high probability. Love it. Okay. So now let me show you how we can possibly do this. So another possible theory is this. Now, because VXX is generally going down, we can sell the call. So okay, let me confirm. We can actually sell a call that is okay. I'm going to do a simple one now, but we can look at delta and things like that. But you can see this is the 3rd of January. Okay, after New Year, all this, right? I'm going to sell a call, and every time whatever VXX is, right, I'm going to sell a call that is 2 strike price above. Okay, and then let it expire. If it triggers and all that, you will just sort of close the position. Okay, so here you can see I'm going to sell this call. So they will help me calculate the profit and loss. You can see here. Okay, here. So this is VXX. So it's going to expire 6th of January. So I'm going to let it expire. 6th of January is a Friday. I let it expire. So this trade, I trade every Monday, unless it's a holiday. So I go to 9 of January. Okay, this one expire already. Okay, expire. Then I'm going to sell the next month's one. Next week's one. Okay, next week. Okay, next week one. 13th of January. 13th of January, same thing. I'm going to sell 2 strike price up. Sell. Can you see? Okay, the first one I make $170 already. Oh, this 10 contract. Please take note. So 10 contract. But later we look at the risk also. Okay. So this is 13th of January. Same thing. 13th of January is a Friday. Friday 13 Unlucky. No. Okay. So go. Don't touch. Then after that, next week I go and sell 20th of June. So just keep selling. So I've been testing this for quite some time. So far it works. Okay. So we'll continue selling. So 20th of Jan. Okay. If you're accredited investors, if you all can use Think or Swim, you can do a lot of all this. I love like doing all this back testing. I love to check whether all this is working or not. Okay, so all these sell, then close, then expire. Somehow because the price keep going down, you will just keep making money every single week. Okay, sell. I'm waiting for the losses now. Okay, one day the losses will come when the VXX spike. But even if it spike, it doesn't spike a lot. Remember, because the VXX is a ranging kind of index, and therefore the I think it's holiday. Okay, got it. So 10. This one must really go and test it out. Okay, so but overall, right, let me just show this. Can you see every week just make money? $100. Just keep selling the call. So this one is a possible income strategy. But will it look nice if, let's say, every week you just make money? How many of you love to like collect a few $100 every single week? It's back testing. Oh yeah, ETN got reverse split and then this before. But you see, but we are not really like buying or selling it. We just use the options. So this is something that's possible to do. Okay, so this is strategy, possible strategy number 2. Can So I want to just give the 3 strategies now. A bit hungry already. so got it now. So we just strategy number 2, we just sell the call, sell the call, sell the call. Now this is possible, but I think we will suggest a bit of monitoring, because if the price strike right, you may lose a bit of your income also. Okay. So I want to go for strategy number 3, which is a lot safer lah. So I actually tested out. Wow, every week just make money on. Okay, this one I try buying, lose money. Buying the puts, keep on buy here, buy here, buy here, buy here, keep on lose money on. Okay, so VXX don't buy options. Don't buy options. Skip selling options, because the time decay is too much already. Okay. So the safer one is to sell spread. Okay, this one a little bit more advanced, but let me explain to you guys what it means. Now, the danger of selling call, right, is when the VXX price spikes, which sometimes it does, you can see. It's no guarantee, it always goes down. When it spikes, right, you may lose that particular week's not only the income, you may lose your previous income also. You may take a loss. So I prefer to limit our loss and take a bit lesser money. So okay, just to explain what it means. Yes, correct. Actually it's bear call spread. It's bear call spread, not BPS. Got it? Yes, correct. Shout, steady. You all understand already. I want to do progressive so that you all understand better and better. So okay, I just use one to explain but every week you do this, you will become a lot safer. What do I mean by that? Okay, so I prefer to be a bit safer Okay, how many of you prefer to be safer one? If you all prefer to be safer, type me. If you all want to YOLO one, right? don't YOLO. Okay, so very simple I take lesser money, but I'm going to just be a lot safer. So you can see, do a spread here. Wait, let me just confirm. Let me clear all these offers. Okay, clear off. So instead of selling just the call, right? This is the call side. I'm going to sell a call. So if I sell, let's say this call, right, I'm going to collect $26. You see, $26. They take the mid price. After I sell the $26, right, I can actually go 1 or 2 strikes up. I can even go 2 strikes up. Okay, so I'm going to risk $1. I'm going to risk $1. 13.5, 12.5. Okay, I'm going to buy this. Okay, can you see? Like this, right, becomes a lot safer already. So all in all, I collect 26, I give back 15. So in the end, I will still have how much? 26, 15, $11, right? Yeah, $11. I will still collect $11. So $11 times, let's say 10 contract is $110. I still make $110, but I have a very deep peace of mind. Anything happen, I will lose this amount of money. Okay. The recommended delta is still below 0.2 if possible. If let's say there's still income. So if let's say you are monitoring it a little bit more every day, you monitor it, you can sell a delta that is lesser than 0.2. I mean, for super investors, you understand delta actually help us look at the probability. And then if let's say the VIX, right, start to move up, you can actually roll it. You can roll it. Okay, but this one very active already. They're very active. I'm doing something that's a lot more passive. Okay, a lot more passive. Can you understand this? You can do a screenshot of this, or you can rewatch the video. This will be something that we do. Okay, so we wait for the bull call to actually expire. Okay, delta should be small. When you sell options, delta should be as small as possible, lesser than 0.2. Delta is a proxy for the probability whether these particular options will be in the money. In the money means that they will get exercised. Okay, but when we are selling options, we don't want it to be in the money. If it's out of the money, it doesn't hit the money, we make money. Okay, so if it's in the money, we sort of lose that trade. So there's a 22% chance we may lose. Understand? There's a 22% chance we may lose. If we go here, there's a 30% chance we may lose. 30% chance we may lose means we have 70% chance of winning. Would you like to actually have a high probability of winning? Do you know what's high probability? In the stock market, high probability is 50.1%. Higher probability. As long as it's got bigger probability than people, is considered high probability. Super high probability, of course, can be 70%, 80%. Got it? Understand? Oh, we can let it expire. Then anything that actually exercise, we just close everything. Got it all? So this one is 17th of February. Oh, February. Blah, blah, blah. Okay, so let's see what happens. 17th February. Okay, let me go here and then see what happens. Okay, I go for 10 days. So 1 month I do like 3 times only. Okay, so 10 days. This is 3rd of March. Same thing, I sell. Let's see whether make money or lose money. Sometimes we lose money. I want to see a lost money. Then after that I can see. Okay, so overall still make. You make $260, you still make 110. You see, this one lose money, this one make money, in the end still make. Got it? So the period, I like to do weekly. Okay, weekly so that the data, the weekly, the options is more. But of course, if let's say you're using other brokerage account, right, please make sure you calculate the commissions that you do, the fees you have to pay. If let's say you collect, let's say $5, then you have to pay $5, then you do what? You might as well go and watch movie, right? Huh? Got it? Yes, the maximum risk of the bear call spread is only $100. Okay, so you can do 10 contracts, and then you must go and calculate. Can do two strategy two with stop loss. Can. You can do with stop loss. Okay, guys, but I want to explain you all something. Stop loss, right, doesn't mean confirm one. Okay, because I've seen stop loss. Actually, this one should be quite safe lah. There shouldn't be a gap up. There shouldn't be a gap up. Stop loss is you're putting in a order for the brokerage to say, hey, if it triggers hit there, right, please help me close the position. Okay, typically it's quite safe for VXX because all these ETF, right, they don't have gap up, gap down, gap up, gap down. Gap is like the stop, you also cannot stop already. Okay, can So okay, so measure the $1 to $2 spread. Okay, actually it's $1,000. The risk is $1,000. Okay, so you are risking about $1,000, but maximum you lose is there okay, for each of the 10 contract. One contract is $100. So 10 contract is $10,000. But however, you're going to do the back testing and things like that, right? You can set a stop loss. You can also actually collect the weekly income, which is pretty safe. Now, so this is the more sophisticated one, guys. So let me summarize this. But all this is very high probability. High probability must be also linked to good payoff. Risk to reward must be high. So overall, I just want to say that we can use options to actually do all this. But why do we sell options? We sell options because the volatility is very high. Make sense or not? Can I understand this? You can understand how many type? Why? Okay. If let's say we say that, hey, too complicated lah. Can't sell, can't make income. Then after that, sometimes may lose one. Myself is just long SVIX. Okay, no? Got it? But options gives you a lot more ability to structure gross income. And actually, I saw that there's a lot of seasoned investors, right? For VXX, right? They use iron condor. Iron condor means they get income from both spreads and they actually make sure that there's a risk stop loss. Okay, got it? So also sometimes you don't need to go for 1 week, 2 weeks, because sometimes 1 week, 2 weeks, right? If let's say the income is too little, doesn't even pay for your fees, and you can go for maybe what do you call it? Longer time period, maybe every month. Every month you can go for, let's say, higher in the money one. Okay, so lesser delta, you get more income with lesser risk. Okay, lesser risk means, right, as VIX move, right, you can actually go and roll the options. Okay, this is a bit more I would say advanced already. So I don't want to go too advanced because I'm worried that some of you guys are still very new. Okay, so very new one. I hope your key takeaway is you can long SVIX. Now, let's check. Some of you may be thinking, if I can long SVIX, I can buy this ETF, make a lot of percent, 70%, right? Can I use options? Can you use option on SVIX? What do you think? Can you use options on SVIX? Yes or no? Oh, no, there's no option, sorry. So you can go for those. Okay, yeah, there's no options. There's also don't have. Okay, but you can look at some of the other products, right? Some of them may have options on. Now, you must understand, this SVIX, right? The volatility is very, very high. So when you use options, right, you're paying a lot for the options. So for all these VIX, VXX, right, you are actually already using options. Why? Because when you actually short VIX future ETF, right, they are helping you use the option in your ETF. That's why they are making a lot more than the SPX, the SPY. Understand so far? Or is it getting too confusing? Cannot? You also can do boo spread. Yes, I love it. Okay, Sylvia, I love the fact you see, once you understand options, right, you can do so many things and you can actually really craft it. Okay, so that's the key thing I want to share with you guys now. Okay, so I do hope that this session is beneficial for you. How many of you find that it is valuable? How many of you want the recording? You want the recording? Please type R. You'll give me some time. Later I will just put it into the Telegram group. Okay, so a few administrative things first. Make sure you are inside the Telegram group. I will post the recording inside the Telegram group. Okay, so let me put here first. Then you'll go and watch. I will also put the thanks a lot. I will also put the slides inside. Okay, so you all can go and rewatch the slides. So this one, I hope that it helps you. I want to strongly encourage, if let's say you are still very new to options and all that, right, don't get discouraged. I also took some time before all this can actually make sense. Okay, So I do a bit of promotion here because I strongly, highly encourage for those who are not in super investors, do join us. Okay. So a very quick promotion. Okay, because I mean this one I strongly believe in the product. Okay, two things. Okay. One thing is right. For those who want to learn more about options, any of you guys feel that wow, these options right is too much. I don't want to touch it ever again. If you don't want to touch it ever again, then don't touch. Don't touch options. Okay. But if you want to, I do have this particular program called Super Option Strategy. This one, okay, the strategy that we are learning, right, is we are going into options Greeks because all this you need to know theta, vega, delta, and then you need to understand all the bullish strategy and the non-directional strategy, income strategy. So this one is something that I actually I created this for those who really want to go in depth into options. Now, the price of this particular program, right, is, in my opinion, is really, really very affordable because I attended a lot of options courses. Okay. Actually, you can see all the advanced strategy, how I actually trade from 2,000 to 27,000. All these, right? The price is 1,997. And today I'm going to give you guys a very, very big discount. If you want a big discount and you're interested in this, you can type me. Okay, type me. Okay, can? No, you don't need to look at TA at all because there's no market forces in this. Okay? For those who want a big discount. For those who already have, you're going to watch. Some of you already have. Why you're still type? Okay. So now, in order to get a discount, right, this is something you all must do. I want you all to join Super Investor. Now, let me explain to you what Super Investor. Super Investor, right, is basically, let me share with you. Super Investor is where I do live trading with you all every single week. Okay, I shouldn't say that. Super Investor is I show you how I do live trading every single week. I cannot say that I do live trading with you all. There are things that I can say, there are things I cannot say. So let me share with you guys this. So, okay, I'll have live trades, and then this is where we bring our portfolio up. And then you can see every single week, can look at my portfolio, then can ask questions. Initially, it's once a month. I'm so sorry about that. I wanted to do once a month, but after that, there's too much opportunities. I'm learning new things. So I'll do live trading with you guys every week. So every week, do stay tuned, do stay with me. And these super investors, I think you'll be shocked. For usually, maybe you want to get like a very close in touch mentorship with me. Last time, typically, probably will be a very high price. Now, right, super investors, I think y'all will be a bit shocked that it is so affordable. The price is only $39 a month only. So actually, y'all sell one option already free already. It's basically a free club. How many of you are in Super Investor and y'all endorse it? For those in Super Investor and y'all think it's very valuable, right? Y'all can help me type some good things. How many star rating y'all give upon 10 star, 5 star? Can Okay. Hey, Super Investors, I think really no brainer should join. So I'm going to give you all this link. Please join Super Investor. So for today only, today, if you join Super Investor, okay, I actually have this particular option for you. Okay, option for you, right, to add to the order the super options, and it's only $399. Okay, this all I want to share with you guys. Okay, can now? So I do hope that you all at least join Super Investor. Okay, not compulsory. This super options is not compulsory, but it's for those who really want to sit down over the weekend, listen to my voice, and then understand all the options grid, go into more in depth, then you will be there. Okay, can? So let me just put the link in for you. Then for those who want, you can go. Yeah, for those who are very, very new, super investors, right? I will share that we do both simple strategy and advanced strategy. So typically, for those who have been in with me for super investor, you all know that our simple strategy is two. Okay, simple strategy, right? The two things that I really like to do, which I think you're really, if you're my friend sitting at a coffee shop, I cannot tell you what to do. Okay, you're my friend sitting at a coffee shop, those kind of things. What I'll ask you to do is to focus on two strategy. Number one, bullish. Okay, so super investors, we do a lot of bullish strategy. Where's my super super investors, okay, we do a lot of bullish strategy, which is focusing on identifying all the bullish strategy. We buy call, mainly we do a lot of long call, then we sell a lot of short-term call. I guess my value that I can do for you is I am looking through stocks every single day. I study every single day, so you'll see what kind of stocks I actually buy. Okay, so this is what I do. And also, what else? Okay, and also income strategy. Okay, we do diagonal call a lot, and then we also sell a lot of iron condo. So this one is actually quite basic one, and then you'll see adjustment. Now, do we do advanced strategy? Yesterday, we tested out one advanced strategy called the box spread. The box spread is a zero risk strategy. Very funny, very funny. The live trading so far, what's the win rate? Realized win rate. I don't want to say until like it's confirmed. But so far, we have not have any realized loss yet, do we? For those super investors, have we lost money yet? We haven't lost money yet, But I want to tell you this, we'll lose money one. confirm we'll lose money one. It's just that when we lose more. I a bit scared now because now so far since they joined until now we have been making money. Some of the combos it is unrealized loss, but it's because it haven't hit our trigger yet. So far we haven't lose money yet. Okay, very scary. But I can tell you, let's not guarantee anything, but I will guarantee you that what you see me doing is what I'm really doing. I've been doing this for like almost 2 decades, 20 years now. Okay, now get it now? You cannot find the page. Wow, means that they really don't want you to buy. Okay, it can or not? So we click the thing already. If you all click on the link, we'll see whether it can or not. Okay, yeah, it's a lifetime. So let me explain to you this option, super option strategy, right? I will be updating it. Okay. So there are new strategies I'm learning. I'll be sharing with you guys more things. So when you learn all this, right, I'll be recording some of the latest strategies that I learned. This will be updated lifetime. The super investor one, I want you all to really invest a bit of money every single month. Otherwise, you all won't attend. I have seen like a lot of you all register for this weekend also, not everybody attend. So I want you all to actually pay like a bit of like Netflix fee, but come and then make money back together. Can? So this is the whole idea. Got it? Wow, OMM very different. OMM is the person go and look through your own individual portfolio and your own dissect, really customize and do it for really for you alone. Because sometimes when you want to actually follow my strategies, right, some things you may not be able to do because your portfolio size may be different from mine. But OMM is personalized for you. And the one is really the highest that can ever go. Can repair for lost trade. Yeah. So I mean, okay, okay, for those who have losing trade, right, I want to share with you there are a lot of repair strategy. Maybe I share with you all some now. Okay, because I don't know how many of you will join Super Investors. I hope all of you all join because I really want this community to be super awesome. And I am actually looking for some super investors to personally pick you to join my hedge fund also. I'm looking for a portfolio manager. I'm also going to come out. Okay, so some heads up. I'm also talking to some other funds, right? We want to do a competition. Competition means we all go inside and then we do some live trades together. We want you all to join in and then have some prizes for fun. Okay, I think investing need not to be too serious. We must be serious with our money, but let's have some fun learning. Okay, so sorry, what was your asking? Okay, yeah. Hey, can I share one more stock repair strategy? Is it okay? Oh, okay. So sorry if let's say it is a little bit confusing. Super Investor Club, let me explain now. Super Investor Club, every single month, this one, you will get a Zoom link from me to join me in my live trade, typically every Friday. So we'll do live trade. I will give you premium report, and then we will also like learn a little bit more strategies here and there. Okay. Now, this is every single month. So it's a live trade community club. So we every week we trade together. For super options, this one is pre-recorded already. All this is recorded. You go and watch. You can watch this. I mean, it's yours lah. Okay. So all this strategy, you can watch it at your own pace. So this one, it is basically you're purchasing a recorded course. It is very in-depth. There's a lot of advanced strategy. Then after you learn this already, we live trade together every month. For those who want to just join live trade, it is also okay. It's just that super options is suitable for those who are really in-depth into options. You really want to learn a lot more options. If you just want to live trade with me and learn together on the job training, I think you'll be fine also. Can only purchase for the recording. You mean for the hey, don't be silly lah. If you just go and purchase for the recording, it is 199. Okay. So if you just purchase for this, is 1997. So this one is a special offer today. You join us for 1 month, then you get this one at 399. Then you just unsubscribe lah. If you don't like, make sense or not? Then it's just the unsubscribe quite easy one. Just click unsubscribe only. Make sense, right? Okay, so yeah, in terms of platform, right? Yeah. Actually, I'm using a lot more IBK. I'm trying to use other things like pasty trades and things like that. Okay, can So okay, that's all I want to share with you guys. Hey, I'm going to pause the recording so that it doesn't take too long to